awkward pauses as the camera and poses, but there are lots of people listening and watching virtually, and it's a live stream throughout the day. So I just wanted to say that first. For those of you I haven't met or who don't know, my name is Jason Paltritz. I'm the Executive Vice President of Corporate Services here at OTC Markets Group. I'd like to welcome you all to our brand new office space. We moved in April. So you're some of our first guests. This is our first large event. Some of you were here for our market open. So hopefully you enjoyed that as well. And with me, a good friend, colleague, and business associate,
Richard Carlton, CEO of the Canadian Securities Exchange, based in Toronto. I see many familiar faces here this morning and virtually as well. We too just moved into a new office space. We're on the 72nd floor in downtown Toronto. The view is fantastic. We actually can see the Statue of Liberty. No, we can't. That's a lie. Almost. We can see the great state of New York across Lake Ontario, though, if you're feeling homesick, although unfortunately it's the M&T Tower in downtown Buffalo, which is not exactly the same as the Statue of Liberty.
Close.
You're seeing the latest iteration of the Jason and Richard show. We've taken this thing on the road literally all over the world at this point, as the Canadian Securities Exchange and the OTC markets collectively have assisted many of you in the audience from the issuer community and many of you watching virtually today to capitalize the cannabis industry in North America. Collectively, we have opened a pool of liquidity, both through initial investment from Canada, the United States, Europe, Asia, and every other part of the world, and also market liquidity in the world. That is the combination of Canada and the United States. And we've developed this great partnership over the last 5 years now. In fact, we kind of shook on it before the cannabis thing was even a thing. We were looking at helping out mining companies, technology companies, and so on, broaden their base of shareholders and broaden their capital formation opportunities. And it's been a fantastic ride with many of you from the cannabis industry in Canada, the United States, and now increasingly from other parts around the world, as we've been, I think, a key part of the success and the growth so far of this really exciting industry.
Yeah, it's interesting. The CSE, OTC markets, we're not New York Stock Exchange or the Toronto. And so we are not. And so people often question or look at us and wonder. What's interesting is that for lots of reasons. But it's funny, the capital raising, capital formation, secondary market infrastructure hasn't changed really in any great significant way in a long time. And the one constant through that has always been that it really does underserve not only just small cap companies, but new breeds of business. And I would say cannabis is one of those. And it requires innovative markets. It requires companies that are willing to do things a little differently, companies like ours that listen to the needs of issuers, to really be able to think creatively and innovatively about how to help companies raise capital. Our own company went public 10 years ago. We've been through this ride of a sub 50 million market cap company in a market infrastructure space to where we are now of just over 400 million. We understand what that means. And we understand that the traditional exchange model perhaps isn't always the best way forward. And so being able to work with a partner like the CSE, who is also, while an exchange, very innovative, creative, understanding, again, the market you need, maybe not, you don't necessarily need a whole lot of things to get started, and being able to work creatively together. It started with mining and minerals. It's gone into fintech, biotech, and we're fortunate here. We've really been able to add value in the cannabis space. We have over 200 cannabis companies publicly traded on our markets, our QX and QB market. A large percentage of those are on the CSE.
I think 177 of them.
Right.
Wow.
And so for traditional, not traditional, for cannabis companies, at the onset, it was very difficult to figure out how to raise capital, how to go public, and how to service your shareholders. You know, the going public part, that's the start. That's not the finish. It's a marathon. It's not a sprint. Having a secondary market to service shareholders and expand your shareholder base is incredibly important. And CEOs need to think about that and think about that carefully, because that's really what being public is all about. So being able to service those across the border between North America and Canada, we think has added a tremendous amount of value. And so if you look back, it hasn't been much more than 5 years from cannabis being a 0 billion market cap industry to a
60 billion
market cap industry. And I would like,
and it was 100 billion briefly.
Yeah, that's okay.
Back at 60, but it'll be back.
But as Richard said, we've taken this on the road, and I think we're very proud to say that we kind of pushed that along, played an integral role in that 0 to 60 transformation.
I was going to say, and one of the things that, and here we are. We've been, in case you hadn't noticed, we were playing for time a little bit. Our Bloomberg reporter who will be hosting the Fireside Chat, Christine Aram, who's been a native New Yorker now for 2 weeks. A month now, yes. She was stuck in an Uber because somebody didn't explain to her that Midtown to downtown during rush hour is kind of difficult on occasion. Sorry, Christine. How you doing? Wonderful, thank you. One of the things I was going to say is that from the Canadian Securities Exchange, and again with our partners at the OTC markets, one of the things to look for next year is we look to put together a series of liquidity boot camps across North America, aimed specifically at our issuers, because it really is challenging in this new world that we face, finding a shareholder audience and how to communicate with your existing shareholders. More importantly, how to communicate your message to prospective investors and shareholders as well. The traditional models have broken down, and some of the techniques that large cap companies use to engage in investor relations are just simply not apt for this part of the world, because let's be honest, you're not looking at a heavy component of institutional investment in the companies yet. And so the fact that you've got a heavy component of retail investors means that you have to think about and look at the market perhaps a little differently than your prospective peers in the consumer packaged goods field, for example. And so we know our CEOs are frustrated in many respects about how to deal with and how to work with and how to tell that message. They're being hit by folks that are trying to pitch paid research, paid market making, tout sheets, all sorts of things that are coming forward. And we know enough at this point to, I think, share some learning. And as I say, we're very excited to be able to, I think, put that program together in the coming months.
So with that, because our moderator is here, we are going to move to the Fireside Chat portion. We have a great event today. We're delighted to have CSE, OTC Mark, OTCQX companies, 7 of them, here to present. So hopefully you find tremendous amount of value in that. We are going to start with Fireside Chat, Richard and I, to talk about the state of the industry. Logistics, for those of you that didn't see it, there is food outside. That will be swapped out for lunch as we get closer to lunch, and certainly at about 3:30, hopefully we stay on time, that will be swapped out for a cocktail, which will all be here. So please avail yourselves of all of that. The restrooms are kind of outside and around. So hopefully if you need those, they're there as well.
And the Wi-Fi password?
And the Wi-Fi password is, that I don't know. So you should have cards if you need Wi-Fi. Lastly, I would ask in the mingling and when we have time, my entire staff is here. We're not just a market operator. We do a lot of visibility programs. There's going to be videos for our companies that are taped. There's a lot of things that we do. Please introduce yourself to my team. We all have these really nice little silver badges. But welcome and feel at home here, and we're glad to have you. So with that, I think we are...
I'm going to put you in the middle.
Why? It's a little red.
Mm-hmm. Actually, why don't you and I do this? This?
Sure.
Okay.
No.
okay, we've got it's a core
We've done this
competency,
before.
as you pointed out to us last week in our prep call.
I wasn't worried about building a ton.
That's a reporter code for they've got big mouths.
So I know you probably just chatted about some of this, but before we launch into our discussion about the alliance between chatting last week, I was surprised to hear that we do nothing to do with cannabis at all. Outcome, the number of cannabis. Talk a bit about how that came about.
Well, I think to start, and I mentioned it briefly, we both come at the capital markets from very similar views. You may have seen we have a banner out there, right? Being public shouldn't be painful. We talk about, the right market or the markets that companies need and helping small cap companies grow. We talk about transparency. The exchanges are great. I don't begrudge the exchanges, but they take a merit review approach to things. You kind of have to fit in the box. We take a much more transparency and disclosure view of things, thinking that if you put the information out, investors are better positioned to decide what's investable and what's not. And when we met with the CSE, it was, like two twins that had been separated at birth, right? We were preaching the same gospel, and we were preaching it to really the same types of companies. And it really was love at first sight, right? We were both talking about the same things in our respective markets, and it very quickly realized that, well, wait a minute, Canadian companies want to access the U.S., and U.S. companies want a better way maybe to go public that's more efficient and cost effective. And so it just kind of took on a life of its own.
Yeah, and in fact, it was at the Vancouver Resource International Resource, VRIC, whatever that conference is. VRIC in January of 2014 that we had our first meeting. And very much, as Jason said, we recognized that we were servicing a lot of the same community because, I think, Christine, as you know, many Canadian issuers, whether they know it or not, have a 5-character FINRA symbol ending in the letter F, and do in fact trade on the over the counter in the United States as well. And in particular, of course, the mining industry was extremely frustrated with the difficulties in raising funds and supporting secondary market liquidity. And when we realized that, again, many of these companies also were trading on the pinks or the gray market. And when we realized that working with these companies, we could have them trade on a regulated board that was offered either the QB or the QX by the OTC markets, that had, I would say, considerably more credibility than the pink sheets. Jason, can I say that out loud?
You can.
Good.
We own it, but we understand it.
And that would give the issuers, in fact, a better platform to project themselves into the United States. And again, it just seemed to make perfect sense to join efforts with the OTC to better educate the issuer community and the investor community about the benefits of accessing more trading and capital formation opportunities here in the United States.
So I would imagine that when you were at a Vancouver Resource and Mining Conference in 2014, you never would have imagined that here we are 5 years later, and correct me if I'm wrong, but one of the primary industries that is cross-listing between the two of you is cannabis. I think in 2014 that would have felt like a pretty long shot. We only had a few publicly traded companies back then.
We had none.
Canopy, I think, initially went public in 2014. Not at that point? Okay. So none. It was...
We were 6 weeks away, or maybe 8 weeks away from the fateful conversation that I had with our listings head, who came in to say that the other exchange group in Canada had turned away a number of Canadian license applicants, Supreme and Aurora being the two main ones. Tweed, as Canopy was then called, was so far down the list, although they were intensely frustrated, I think it's fair to say, with the other exchange group, decided they shall remain nameless. Were too far down the road, they felt, to pull the plug and jump ship, as it were. But it was actually the middle of March that we saw the first companies that came on board.
But fast forward 5 years, and here we are at a cannabis-focused event. It's been an interesting stretch, obviously, that kind of goes without saying. We had tremendous euphoria and optimism and bullishness in the markets leading into legalization in Canada 1 year ago, October of 2018. Since then, it's been a bumpier ride since about March. Is this on? Is that working? Okay. Oh, sorry. So since March, though, it's been a bumpier ride. The average cannabis stock is down about 50% since then. So it's been a tough stretch, obviously. And in any industry, this kind of market trend tends to result in fewer companies going public. Those that are public find a harder time raising money. So I want to talk about how you're finding the current environment now on both of your markets. Jason, do you want to start? How have things changed over the last 6 or 7 months?
I don't know that they have for us, right? I think Richard might have a little bit of a different view as the primary market in our relationship, right? So we're the secondary market. The velocity maybe has slowed down a bit in terms of number of applications or companies looking to cross trade with us, but not significantly. I mean, obviously we all talk about the prices have come off and trading may have come off a little bit, but you're still seeing companies wanting to access the US. You still see kind of applications coming in and companies wanting to be public on our markets. I think you're seeing the big change would be those companies have to work a little bit harder now. I think part of what we're seeing is more demand from our kind of visibility programs and things that we do to help companies access the investor base. I think they have to compete a little harder to tell their story. And I liken it, we talked about this, right? You saw this in my earlier career. You saw it a little bit with the tech bubble, right? That initial euphoria, and then kind of things pulled back a little. And then the cream rises to the top. You see some M&A. You see the good companies have to work a little harder, but kind of get themselves through it. I think we're kind of in that now as we see it. But there's still a tremendous number of companies that are calling us and wanting to go public here down south.
I hear that comparison to the tech bubble quite often. And actually, I was just talking to a CEO yesterday of a company that's planning to list on the CSE soon, a California-based company called Manifest 7, that made that analogy. And he was saying, we've passed the 1.0 stage, we're heading into the 2.0 stage. And this kind of a shakeout is actually healthy because, as you say, it gets rid of the dead weight and the cream rises to the top. So actually, Richard, I wanted to show a couple of slides, if you don't mind. I'll grab this from you, that illustrate in an interesting way, there we go, what's been happening on the CSE. So this is 2018 versus 2019 by deal type here. And you can see in the light blue there, the number of reverse takeovers has fallen off quite significantly, 51% in 2018, 14% so far this year to date. But other types of fundraising have replaced that. So we see a lot more convertible debentures being issued, more debt. Equity has remained relatively steady. And then just one more here. Also, the number of companies issued on the exchange, that cannabis has remained completely steady despite the drop-off in share prices. And one more here. Top 10 financings year to date, you will see that all 10 of those are cannabis companies. But only 2 of those are RTOs, and most of them are other forms of fundraising. So I just thought that was an interesting illustration of how things are beginning to shift. Maybe talk in a bit more detail about what you're seeing.
Yeah, I guess there's a few themes that come up there. The first one is the numbers show that on a year-to-date basis, we're tracking just behind 2018 in terms of the amount of money raised by companies on the CSE or coming onto the CSE. But in fact, the nature of that money has changed. It's largely being raised by existing issuers as secondary offerings, and as you say, debt instruments, convertible. And the larger financings, again, as you saw from the chart, are from existing issuers who are looking to finance mergers and acquisitions. And that certainly took place earlier in the year when the share prices were a little bit healthier. And the issuing stock as well as cash to do the acquisitions wouldn't have been as obviously dilutive. Where we are now is the mergers and acquisitions activity has actually slowed. And the existing large companies who have been successful and have grown, I'd say, are finding, again, that their share price really just doesn't support issuance of additional shares to look at the new companies. We've seen a change in the character. So 2018 was really all about, and if you include, I guess, 17 as well, that's when you saw the big US multi-state operators arrive. This year, we've seen a lot of geographical diversity. So the companies aren't necessarily as big as the Trulieve, Crescos, Harvests, but they're coming from different parts of the world. We have our first two Asian companies, Thailand, where they're. We have our first companies from Colombia. Actually, kind of cool. I mean, I never thought of.
I think we're having some technical difficulties.
I was joking about it the other day. I'm actually more afraid of the private equity people that we deal with.
That's more of a joke.
But I am. We have this just this past week. We signed a memorandum of understanding with the Jamaica Stock Exchange. And Jamaica, of course, is another, shall we say, legacy brand in the cannabis business. They really do call it ganja. And I have a hard time keeping a straight face when they say ganja in this series. And again, the relationship with the Jamaica Stock Exchange is that they are, for banking concerns, unable to clear and settle trades. The stock exchange. So, all of this relationship, what we're looking to do is they will provide in effect, a ceremonial listing. Stock exchange. They will simultaneously list on the Canadian Securities Exchange. They'll become a reporting issuer in Canada and open up capital formation opportunities in Canada. And trading will take place in Canada. The shares will be custodied in Canada. And they've worked out a relationship with one of the leading prime brokers in Kellen institutional flow from Jamaica. Will in fact, Jamaican brokers will be represented by that prime broker onto the team. So we're looking to in addition, Jason and I have been to Israel over the last. For those of you who haven't been, Tel Aviv is one of the great party capitals of the world, and nobody knows it. It's absolutely amazing.
We work hard though. When we
No, that's right. We work very hard. There's crime around. But Israel is the leader in the world in terms of medical research on and human trials because they've been using cannabis products to treat PTSD for many, many years at this point. Well, the leading research on the compounds have been done at Hebrew University and again, the industry there is very advanced. But again, like all Israeli companies, are relatively small, and the local capital market is deeply supporting their growth to. So we have now listed the first of a cohort of Israeli companies that will be entering the capital markets in North America. And they are of all kinds of extraction, formulation, nutraceutical, pharmaceutical, cultivation, export to different markets. Very, very interesting companies that started to join the exchange. Last but not least, we've also seen our first European issues. Commercial opportunities in Germany, in Italy, Denmark, Netherlands, which they will be medical, not recreational jurisdiction.
Very interesting. And I think the Jamaican example is a great illustration of some of the difficulties that other countries face when they're trying to sort of move into the public markets. And we actually had the Jamaican trade minister at Bloomberg a few weeks ago talking about that and the issues the country as a whole has because they really want to get into exporting cannabis. But because their banking system is so inextricably tied to the US, they have a very hard time, even if they wanted to export to a country in Europe or Australia or whatever it might be, that link to the American banking system makes it very difficult for them to do that without violating potential money laundering laws and that kind of thing. So, Jason, I'm curious, I assume all of these international companies that Richard is talking about would also like a path to the US investor. So talk a bit about how, again, that partnership with OTC gives them that route that they may not otherwise, that access that they may not otherwise have.
All right. So, I mean, the beauty of it is that it's transportable, right? And so what's interesting is that the traditional route, and Israel's a great example because one of the US exchanges has quite a big brand in Israel from their days before they were an exchange in helping small biotech companies access the public market. That company is now an exchange, so you probably know who that is.
NASDAQ.
But the NASDAQ brand, resonates, but it's really not necessarily. So it's kind of, companies are constantly thinking NASDAQ, 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 now that you brought it up. But for myriad reasons, the exchanges don't want to list these companies, but at the same time, there's the realization that accessing the US capital market is an important part of the growth. So being able to have your IPO or your initial in Canada is kind of a unique proposition that people didn't really think about that long ago. And being able to be on a G7 exchange, be fully regulated, be able to do an IPO, be able to do it at significantly less cost and complexity. I mean, things people don't think about. D&O insurance listing here versus D&O insurance listing there is huge. The difference is significant. So being able to educate companies that there still is a path to be able to go public. And from a cannabis perspective in Israel, it is the leading cannabis market. So you're in the epicenter of cannabis capital raising. To be able to do that and yet still be able to access the U.S. retail, family office, high net worth ecosystem is really unique. And I think we're seeing that again. I was not with Richard, but with one of his colleagues in Singapore. We're in Australia, we're in Israel, we're in myriad markets where everybody thought, to my opening statement, that there was really only one path to going public in North America. And what our relationship has brought, and certainly cannabis has pushed it even further, is that there's a lot of different ways to getting to that end goal of raising money and accessing investors, servicing your investors, growing your shareholder base, not just in cannabis, in all sorts of companies. The SEC did a study way back, which is still true now, that the majority of sub 500 million market cap companies, I think the number is 75 or 85% held by retail. And so it really is about finding the markets that meet your need. And we've done that with cannabis. And again, around the world, it's the same story. It's almost plug and play. And it works.
So sticking to the topic of the investor base, I mean, it's very, very true that to date, the investor base in most cannabis companies, including many of the large cap ones, is still very retail investor heavy, and still very Canadian too. But that's beginning to change bit by bit. You're seeing more.
Makes it more polite than most other retail.
You're seeing more.
They're not just retail investors. We like to call them their cause investors, right? It's retail, but it's cause investors. It's people that believe in what these companies are doing, whether they're utilizing the service or they've been pro-legalization their whole life. But cause investor, while yes, retail, there's a difference. And cause investors will follow you irrespective where you trade.
Very good point. So, but has the investor appetite, I guess the investor base begun to shift at all? Have you two noticed that? Are you seeing more diversity in terms of the locations or the types of investors that you're attracting to these companies?
So we track this. And I think last year we saw investment from 108 different jurisdictions during the on a primary race, and we see order flow from, as I mentioned, all over the world. Our website, the hits come from, as I say. So it is certainly diversifying from an international. It is true that the core equity component remains cause investors. But one of the interesting things, and this has been a real trend in 2019, is how quickly the U.S. private equity space adapting to the restrictions and other issues that they've had, able to provide not the same range of services that people get, whether it's factoring, equipment finance, real estate finance. Going to see, and I think the first announcement was out last week that sell and lease back some of its grow facilities to so a lot of the financing techniques which have been available to non-cannabis companies are starting to be created, which is great because it means that these companies having a harder and harder time maybe raising equity capital are able to diversify their balance sheets with debt or debt-like type instruments. Reduce the capital intensity by and I think this is, fast or not, will certainly continue.
For a time, basically equity financing was the only way to raise money for this industry, period. There was no debt, there was nothing else at all. And as you say, that is beginning to change gradually and actually faster and faster. But I'm wondering, is that, you say it's a good thing, but it also means that the public exchanges are getting less business by definition because these companies are perhaps staying private longer because they have alternate routes, or if they are public, they're looking at these alternative sources of financing like sale leasebacks and that kind of thing. So, Jason, what are your thoughts on that? Do you think, is this a positive sign of maturity for the industry, or is it a negative for the capital markets or the public markets?
I think it's all positive. I mean, I think this market, you've said it, it's maturing, it's advancing, it's going to hit bumps, it's going to have problems, but I think ultimately it's going to come out where it should come out, right? I think we often say, the horse has left the barn, right? It's just how it's going to get there. Is that doesn't sound right? The horse has left the barn, that part of it. But I think it's all part of growing a market. It ebbs and flows, and things work and don't work. But the markets are efficient. I think investors understand that, and they will coalesce around, in the right place.
And ultimately, it should be about cost of capital. And I think as we've talked, the cost of capital should be paramount. And if equity happens to be a particular advantage in a situation, then that will rule. But as I say, I think it's very healthy that the companies have choices. And again, just from standard balance sheet management, they should have access to debt capital as well. Absolutely.
Let's talk about stigma, because this industry has come a long way, but it certainly has not yet escaped the stigma that has followed it around for decades. BNY Mellon recently said that they were going to stop clearing most cannabis trades. This is particularly true in the US and Canada, I would say. It's a very different situation. But Jason, I'm curious to get your thoughts on that, because it's still difficult to be an operator in this industry in the US. That has, in a way, benefited you, because it means that these companies, especially the ones with American operations, can't list on the US exchanges. But that stigma also holds back the industry overall. So just what are your thoughts on sort of where we're at in that process of destigmatization?
Every time you think we take 2 steps forward, you get an announcement like the one, for those of you that don't know, BNY Mellon saying that their Pershing unit will no longer clear cannabis stocks. Myopic, it's frustrating. It just demonstrates, though, how difficult it is in the U.S. market with everything that's going on. I think it's a bump in the road. I think in this country we are getting to the point where we'll soon be able to bank cannabis. We'll soon be able to insure cannabis companies. There's regulation around insurance making its way. And once that happens, then that kind of lifts the risk from a Bank of New York perspective, right? Bank of New York just doesn't want to get jammed up by their federal regulators for clearing something that may be deemed in violation of something. So, large banks are risk adverse, just like large exchanges are risk adverse. And so what does that mean? The capital markets continue, and players that are not old and stodgy and same old come in to fill the void. That's why we're here. And there are still plenty, that's why they're here. And there are still plenty of companies, clearing firms and other operators that are willing, that see this as a growing, no pun intended, industry, that are willing to bank it or clear it or do those sorts of things. And so unfortunately, it's the large banks that are stodgy and staid that kind of miss out on the opportunity. At the same time, though, you just find that's where you find innovation. You find it all the time. We're constantly innovating. We're able to do things that the exchanges can't do, and there are clearing firms and banks that are able to do things in cannabis creatively to get companies and investors what they need. And I think that will continue. And disrupt, it's disrupting. And I think we certainly think disruption is good.
Yeah, in my perspective, the Pershing announcement was really more apparent than real. We've sat down with the Pershing guys for years, and they've told us that they have no interest in clearing the business, and they've told their clients that this was just the most recent iteration. So again, it got people kind of shook up and jumping up and down, but the reality is Pershing wasn't touching the stuff anyway, and that people had already found other ways, other means, non-bank clearers basically, to do the. And again, remember, most of the secondary market liquidity in the United States is provided through the OTC markets, which means that it's a market maker who's actually conducting the trades with their, with the retailer institutional counterparty. I'm pretty confident that Citadel knows how to clear a cannabis stock, and Virtue,
Canaccord,
and the rest of these guys, they don't have any trouble. And that's actually where most of the secondary market liquidity is coming from in the United States. So again, big announcement, but frankly, a non-factor.
And actually, you're right, because there was an ETF, an Advisor Shares Cannabis ETF, that uses BNY Mellon as its custodian, and they said they will remain their custodian. So it's sort of status quo, really.
That's the other thing with large financial institutions. Sometimes when you're getting paid for something, you're less.
It's funny how that works.
You're
exactly.
less inclined to follow through on policy.
When it's a business they weren't doing, they were happy to issue a saying we're not doing this business.
But things are changing, and the Safe Banking Act, which is now passed the House, making its way to the Senate, aims to open U.S. banks to the cannabis industry. The goal primarily there is so that dispensaries can stop paying their employees in cash, paying their taxes in cash, and so on. But some people say that one of the potential outcomes, if the SAFE Act does pass, is that it could potentially open the big U.S. exchanges to cannabis, and then probably the Toronto Stock Exchange as well, because none of those exchanges will currently list cannabis shares with U.S. operations. So if that happens, if that's true, what would that mean for you? Do you fear that as soon as the NYSE and NASDAQ and TSX are in this game, that you'll see a rush of companies moving over to those bigger exchanges?
Competition is good. We take pride in the fact that as just a business, irrespective of cannabis, we help anywhere from 60 to 100 companies every year uplist. We help companies grow up, and there comes a time in the life cycle of a company that the exchange makes a lot of sense. And we think that will happen with cannabis as well, right? Well, these companies will grow up to a point where being on an exchange makes sense. It's really about helping small, early stage companies learn how to be public and get them to that destination rather than just jumping there to start. So if, again, you take not cannabis, but just look at markets, you see any number of early stage, small cap companies immediately take that leap to an exchange. And they find that they're a little bit out of their league. They're paying a lot of money. There's a lot of stuff that goes with that. But the markets can't service them. They're too small. They don't really get on the radar, and they're running around doing stuff. They're not seeing the institutional investors that they thought they would see. They're not in the indices they thought they would get. And it's costing them a lot of money to just maintain that listing. That's why we're here, to help companies so that when they do it, they're ready for it and they can be successful. For every 60 to 100 that go, we take about as many that went too soon that have to come back. And we don't want to see that. That will be the same with cannabis. I think cannabis, there might be this little bit of, we used to be illegal, now we're on a New York Stock Exchange or a NASDAQ hype, and how that's really sexy and fun, and our name's on a board and ringing a bell, maybe. But ultimately, it's about being on the market that best meets the needs of you and your investors. And I think, again, competition is good. We think we have a good story. We'll win more than we lose. But, we just want to make sure that the companies that do go are successful. The capital markets are no good for anybody if you have companies going to New York and NASDAQ and that are just failing their shareholders and failing themselves as a company.
Yeah, I think I'll handle it in two parts. I guess the U.S. part of the story. So I think the average company size coming onto NASDAQ, New York Stock Exchange, is roughly $2 billion U.S., I think. And that's a very small part of the industry at this point. We're not talking about a lot of names that meet that threshold. And there's no doubt that if you are listed on one of the U.S. national exchanges, your cost of capital will go down. So that is part of the regular lifestyle. Now, from a Canadian perspective, what we aim to do under those circumstances is be the marketplace where they dually list on the Canadian side with that big existing shareholder base in Canada. It does make sense for them to retain the Canadian listing in order to service that population in a local market without having to cross the currency spread and the bid offer on the U.S. national exchange. So our aim there is clearly to be the Canadian venue where they are dually listed to, again, support that existing Canadian shareholder base. As for the other exchange group in Canada, that I guess there's a couple of issues there that are normally a factor if it's a Canadian company versus a U.S. company. U.S. company can't go into the index, Canada. Right? Can't go into the S&P TSX composite, can't go into the 60. So that is the main reason that we lose companies to the TSX, is companies when they hit that threshold of being basically index eligible. And the analysts and some of the institutional shareholders all slap them upside the head and say, look, you're going to be in that. You'll see more inclusion in ETFs. You may get analyst coverage and all of that sort of thing. So as I say, that's kind of an unbeatable proposition for a non-U.S. Cannabis company. But for the U.S. guys, as I say, that's not an issue. So again, we're working to continue to cultivate that relationship with them with an expectation that they will maintain their Canadian listing on the CSE as opposed to some of the other alternatives they might have.
So I wanted to leave some time for audience questions. So I'll just wrap up with one more of mine, and then we can turn it over to you guys. I just want to ask about what you think the future is going to look like here. So we had this massive run-up in stock prices and enthusiasm and bullishness and listings, and everything was so euphoric leading into...
Rationally exuberant?
Yes, you could say that, leading into Canadian legalization. You say it in the context of this industry. And then obviously things have begun to, in the words of many people, rationalize over the last 6 months or so. So looking forward, I'll ask both of you, what do you think the next 12 months will look like for this industry, especially for the publicly traded companies? Will there be a major catalyst that sends shares higher again, and just what sort of major trends are you looking to see? Whoever wants to start.
6:30.
Okay. Well, I think just, I don't know if we're going to see it, but one of the things that I would like to see is a decoupling the valuations between the U.S. MSOs and the Canadian LPs, because the correlation has been very high to date. And the retail market in Canada is extremely challenging. So the big and small licensed producers in Canada have had a real challenge hitting their revenue growth benchmarks as opposed to moving towards profitability and sustainability and so on. And the difficulty is that when the Canadian LPs have gotten into trouble, which they have gotten into quite a bit of trouble in some cases, and a sell-off ensues, the whole sector, including the US MSOs, who are operating in a completely different environment, many of whom are being very successful in terms of their growth, their mergers and acquisitions activity, the markets that they're able to address. And as I say, the CEOs are certainly frustrated with the fact that their share price may not, in fact, represent the achievements that they have made to date and the execution according to plan. So I hope that we see at some point into 2020 a recognition of the fact that we are seeing the emergence of the winners, the successful management teams, the successful companies, and that they begin to get rewarded with the valuations that investors are prepared to pay for their stock. We will, as I mentioned, continue to see international diversification. So our pipeline is very big from companies from different geographies around the world. Africa is going to be a thing next year. We have a number of jurisdictions in Africa that are talking about 7 cents a gram for dried flower. I think Aurora currently is the low-cost Canadian producer from their indoor grow at $1.55. So that's pretty compelling difference. But in any event, that whole thesis, I think, will be tested as well, and we'll continue to see that.
Look, I think we'll see, and we talked about it. I think it'll be the cycle. You'll start seeing a lot more M&A, a lot more consolidation. Getting back to what I'd like to see, similar to what Richard was saying, and then getting back to things like the BNY Mellon decision. I'd like to see there be a little more thought in the investor mindset in the U.S. Certainly here, yet if it says cannabis anywhere, somehow it's this evil thing, or maybe I need to shy away from it. And what I've learned is there's a lot of things happening where cannabis is part of it, but it's not all of it. And so, again, going back to Israel and some of the interesting biotech and, we met a company that is literally able to infuse CBD into a skin grafting mechanism that they built, so it actually spray paints skin onto burn victims, and having CBD in it helps A, grow your skin faster, but B, helps with the pain, right? That is a great innovative company that's doing some of the most tremendous work. I was never more impressed, Richard and I sitting in a hotel watching this guy do this. Fascinating, right? But because they can put CBD into it, now somehow it's tarred and feathered with this cannabis brush, as if that shouldn't be a legitimate investable company. And that's just laziness on the part of investors. And I think, we work hard to try to fight that. But again, a company like BNY Mellon saying that I'm not going to clear and settle a company like that because it says cannabis somewhere in their materials just doesn't make much sense to me. And it's really just bad for investors. It puts the U.S. investors at a disadvantage. And I think it's silly.
So we have a few more minutes if there are any questions in the audience for Jason or Richard.
We do have a question for the Virtual Investor Conference. What is meant by the term Cannabis 2.0?
That was the term that was applied in Canada to the series of regulations that came in a couple of weeks ago. Cannabis 1.0 was basically dried flower only, so that when you went to your Ontario cannabis store, I know you did. It was merely research for
It was my job.
It was a job. Yeah, mine too. I said, but in any event, you could only buy dried flower, and you couldn't buy edibles. You couldn't buy oils, topicals, beverages, any other cannabis-infused product.
Apes.
No, we weren't going to talk about that. So the second set of regulations that came in, as I say, a couple of weeks ago, to permit all of these things, subject to provincial and in some cases municipal regulation, that was referred to as Cannabis 2.0. A number of the Canadian LPs were pointing to Cannabis 2.0 as a major potential boost to their revenues. But as usual, of course, the packaging requirements, the content rules, the testing requirements actually haven't been promulgated yet and aren't expected until December or thereabouts. So it will actually be January or February before the products actually begin to hit the legal retail outlets in any scale.
I think it's also come to mean in a broader sense too, just this sort of second phase of the industry. So now that we've seen this decline in stock prices, we're in the middle of a shakeout that I think will result in, as Jason said, the cream rising to the top, and that tech analogy that's often used of getting past the pets.com and getting to the Amazons of the industry. Any others?
Hi. To lower the stigma for cannabis users, are you trying to shop medical and holistic approaches with using cannabis so that you can lower the stigma and market to consumers and seeing that happening a lot more?
I guess there's a couple of ways of approaching that. What is it? I'm old but not stodgy. So, again, I use, THC infused CBD oil on my arthritic, old broken down ski racer knees and make no bones about it. So I guess that's, we try to live what we preach, I guess. But I think one of the issues that people need to understand about investment in this space is that Canada and the United States are basically a recreational play. And although there will be lots of really interesting medical applications, but I think where we are headed to is universal recreational use in the United States and Canada. Am I right, Kim? You with me there? Yeah, okay, good. But the rest of the world it's medical, is how this is going to play out. And both from a pharmaceutical perspective and from a nutraceutical and wellness perspective. So what we know about pharma is it takes a long time, right? You need to be really patient with, because maybe the FDA has the highest, toughest standards in the world, but the European authorities are not much lower down on that thing. So this is going to be, you're looking at a 6 to 8 year timeline before you begin to see real products come out that for prescription type products that physicians would be prescribing. So it's people need to understand that it's going to be a different investment thesis the farther you get from Toronto and New York City.
You said it was being grown in Africa. Which country in Africa is it taking off? In South Africa, where they've legalized it?
Believe it or not, Zimbabwe. In fact, when we were in Israel, I met the largest Zimbabwe cannabis operation there is. So that's certainly one market.
Yeah, anywhere that has altitude and is close to the equator. Eastern part of the DRC, Ethiopia, Zimbabwe, South Africa, and in particular Lesotho is. I feel like I'm on Jeopardy here. African geography for 200, Alex.
Zambia also, and there's a lot of farming in Zambia too. I was wondering if that's one of the countries
again, they need the right ingredients of altitude to prevent the being too hot, and yet close enough to the equator that the sun is overhead most of the year, which it isn't in Edmonton, Alberta, where Aurora has her giant growth.
I think there was another question up here. We just wait for the microphone for the virtual audience.
With the growth of VC funds coming into the space, so you'd mentioned, I would think that there would be it would be beneficial to the exchange because you get companies that have some funding and sophisticated investors that could give guidance to the company to build the company properly, not reinventing the wheel, and then they could go to the exchange. So that's one question I have. So do you feel that's a good thing for your exchange if you, I guess, build relationships?
Yeah, the short answer is yes. It's almost kind of humorous, the change in the management teams that we've seen from 5 years ago. There were a lot of man buns and sandals and tattoos 5 years ago. Not to shame anybody got a man.
What's wrong with man buns?
Tattoos
and sandals and tattoos.
But and then very quickly, we saw transition to folks who were veterans of the consumer packaged goods industry, the pharma industry. At one point, we must have had 6 companies in a row come in for a pre-listing meeting where the CFO had been at Goldman Sachs until 2 weeks earlier. So the professionalism that's brought to the table, which I think is a credit to the industry and its prospects, because you've got these people who presumably have a range of opportunities in business to pursue, have elected to join the cannabis industry, I think is incredibly positive.
Oh, and the second question is, when cannabis is legalized federally, will there be a big issue with, I know there's a variety of states that grow, and like, for instance, you have California where cannabis goes for about $600, what's it, a pound or something, an ounce or something? The measure, what's it, an ounce or pound? Okay, and then
These guys don't even know what they're talking about.
So I would think
They don't even know what they're
automatically
talking
start
about.
shipping from Oregon, and it's going
Oh
to be hard for
my
these
goodness.
California growers
Funny.
to compete with all the taxes and all the.
What does it cost? Like $600 for a gram?
There are going to be different pressures.
$600 for an ounce?
Supply chain.
$600
so-
for a pound?
Yeah, there is basically no industry I can think of
goodness.
where the farmers command the majority of the supply chain.
This is my
Right?
medtainer.
That's a simple,
Don't invest a lot in farming.
perhaps sad fact of the situation. So yeah, it will be a commodity. There will be tremendous competitive pressure on the different parts of the United States that are cultivating. There's no doubt about that. But the other thing is that I think that the likelihood is that the consumption will morph from again dried flower products to derivatives that are higher margin products for the companies that are developing and distributing them and selling them. And as I say, I think that's where the value chain capture will come. Not, as I say, unfortunately for the folks in Humboldt County who've been growing weed for 3 generations on a craft and very high quality basis.
This goes back to the African theme you were talking about with cultivation. So everyone's growing or talking about growing down there at a very low cost. Do they have any idea where they're going to sell it?
Germany.
Okay, so it's all going to Germany because we know it's not coming here.
Right.
Okay.
Yeah, and again, this is going to be a one of these contests of ideas in the next sort of 2-3 years, because there's a school of thought that says, again, I talked about the rest of the world being medical. Most of those have socialized medicine regimes, which means you're selling your product to the government. Is the government going to buy from a low-cost offshore producer, or are they going to prefer to source from a local provider that's relatively higher cost, but may not, in fact, be a big percentage of the actual retail price? So, as I say, that we're going to see that contest of ideas play out over the next year or so.
Very good, thanks.
I think
That's all the time we have.
we have.
Oh,
hit our
here we
time.
go. Trulieve.
Yeah, we filled the time. Wow.
Finally!
So thank you.
Thank you.
Holy
for-
smokes.
Thank you very much. I think we're.
Yeah, sure.
I agree. Aurora will do very well in Germany.
Hello, everyone. You're not going to want to leave just yet. We're about to start our presentations. We're starting with our first presentation. We have Kim Rivers, CEO of Trulieve. Welcome, Kim.
Morning. Everything okay? Good? Okay. So happy to be here. I am Kim Rivers with Trulieve. And first I wanted to just start off by saying a big thank you to the OTC for hosting us today, and of course our partners at the CSE. it is a wild ride out there in cannabis land, and we certainly appreciate the support of both organizations tremendously. So Trulieve, I'm going to pass through all of our necessary. We're at a regulatory conference, so I have to make sure all of our disclosures are covered there. But Trulieve listed about a year ago today, or this month, and our thesis is a little different than some of our other peer group out there. We say that we have focused on the operations part of being an MSO, and we certainly are a true multi-state operator, and not with some of the companies out there, a multi-state aggregator. And through our thesis of really penetrating a market, our goal is to be a leading consumer-facing cannabis brand in the United States. And to do that, we focused first and foremost on our home state of Florida. So Florida is, of course, as many of you know, the third largest state by population in the United States. And we have penetrated that market by serving approximately 55% of the market in Florida. And this is by third-party data by our regulators, the OMMU. Wow. If any of you are interested in Florida-specific data, I encourage you to look at the OMMU website. Not only are dispensations for Trulieve, but for all of our competitive companies in the state of Florida are listed there on a weekly basis every Friday. We also service approximately 50% of the flower market in Florida. So interesting, just to kind of level set us with respect to the Florida market, we are a strict vertically integrated market in Florida. What that means is that we are true seed to sale. So every single product that we have in our now 38 dispensaries across the state are actually grown from one of our grow facilities, and the products are manufactured by our employees. And so it is truly seed to sale. What that has forced us to do in Florida is a couple of things. One, we have had to appropriately scale across the entire supply chain. It also has set us up so that we are building expertise in each function of that supply chain, so that when we are expanding into other states, into other regulatory markets, we're able to understand where those expertise best fit in or plug into that particular regulatory regime. We did complete recent acquisitions into 3 other markets since going public: Massachusetts, which we'll talk about, Connecticut, and California. And in Florida, we do have the second fastest growing patient base out of all medical programs in the U.S., with approximately 3,000 folks entering the Florida program every single week. So it is a high growth market. And Trulieve, we serve approximately 214,000 patients. We actually don't call them patients or customers. We call them Trulievers. And we'll talk about our Truliever Nation here as we go through our presentation. So this is just a slide that highlights our growth compared to the market growth in Florida. You can see that it's a chart that we all like to see, and this is actual historical and not projected. It's up and to the right, and we continue to track the market in dispensations and, of course, in patient growth on a very real-time basis. So let's get into our platform in Florida. And again, just to kind of back up that brand penetration thesis, we knew that many franchise opportunities actually come to Florida to prove out their franchise model. And that's for a couple of reasons. One, of course, the high level of just people that are in Florida. Second, we have a broad range of both socioeconomic and diversity factors across our state that make it representative of many other areas in the country. So again, we knew that if we could adequately penetrate the market in Florida, that we actually had a good shot of being able to prove that we can create brand and we can create that customer connectivity in other markets. But to do so, we knew that we needed to scale. And so Florida has afforded us the opportunity to scale in a very real way. So currently we operate over 1.7 million square feet of cultivation. And again, this is active. This is not projected. These are plants in the ground in these facilities. Through a variety of grow methods, we have low-tech, lower-cost greenhouse grow technology, as well as strict indoor that, of course, serves our premium flower. We have over 250 SKUs. This is growing all the time, of branded products across lines that we manufacture in our GMP-certified, state-of-the-art, 55,000 square feet manufacturing facility. We actually just purchased and closed and are building out a second production facility now in the middle part of the state. And then I mentioned that we have 37. We actually are opening our 38th location today, actually right about now, in Panama City Beach. And so we are growing our retail footprint all the time. She also mentioned that we do home delivery in Florida. We launched home delivery when we opened our first store in Florida. So we do statewide home delivery, which we'll talk about in a minute as well. And so we do expect 44 stores in the state of Florida to be open by the end of the year, and we're certainly on track to meet that goal. So I want to talk about our go-to-market strategy. So in Florida, as I mentioned, we are a bit different in that we're strictly vertical seed to sale. So initially, Trulieve really wanted to understand product manufacturing, how we develop products in these different product lines across the board. However, what we started to realize, and as we thought about expansion outside of our home state, we understand that product diversity is an important part of this business. And just for those of you in the audience, how many of you have visited a store on the West Coast? So California, Colorado, okay. And so when you go into a West Coast store, what's the thing that kind of hits you, right? You walk in and there's 2,000 brands, right? It's not always organized, maybe kind of flower, and there's 20 different vape products. There's lots of different packaging, and it's very sometimes overwhelming, but definitely a lot of choice. Now, how many of you have visited a store on the East Coast, whether it's New York or any other market? Okay, significantly fewer, and that is likely because of the recreational availability out west versus east. But when you go into a store and really any of the East Coast markets, what you'll notice is that it's very different from a branded product perspective. You're going to typically have fewer brands available, more, I'll call it maybe clinical kind of in feel. Just it's a very different customer experience. And so as we think about our Trulievers and how we really want to build this company and build the brand and the retail experience, we really started to sit back and think strategically about this East versus West kind of customer experience, right? Because if you're used to that customer experience on the West Coast, it's going to feel very foreign to you if you go into it right now, an East Coast dispensary, and vice versa. So we sat back and thought about, okay, how can we take the best of both worlds and combine them into a platform? And that's where we came up with our 3-tier strategy. Now, I will say, and I'm very open about this, we did take a couple of notes from Whole Foods and some other retailers that we felt were doing it well. And so when you go into a Whole Foods, everybody's familiar, right? Okay, good. Lots of nods there. They have their house brand, right? It's 360. We've all experienced it. It's on the shelf. It's very approachable. This is our house brand. And we thought that with Trulieve, having a house brand, again, that can compete in every product category would be equally important for us to have. Then what we decided coming into 2019 is to create partnerships with some national players that we could have consistency, hopefully, across our stores as we roll out retail in other markets. And so our second tier is our licensing tier. And so we entered into licensing agreements with some folks that you see on the second line here that are best in breed, we think, in different product categories. And so what you can see is Love's Oven. That is a soft baked goods company that comes out of Colorado. So in Florida, edibles is coming. The law has passed for edibles. We have a 10,000 square foot state-of-the-art kitchen. We're sitting on go, waiting for rules to pass. But what we knew is that we don't know. We didn't know much about shelf stability, allergen programs, how to make these products that taste good, right, but that can transport well, particularly when you're talking about in Florida, right, where we have some humidity and some other different environmental pressures. And so partnering with companies like Love's Oven, also Bang, which is known as the Hershey bar, really, of cannabis, will give us that market expertise. In addition, we partnered with a couple names that you all may be familiar with. Slang, which has a diverse product line. Again, they are in tons of stores on the West Coast. So bringing kind of that West Coast familiarity, also a huge presence in Colorado, into the East Coast to bridge that gap in that conversation. Finally, Blue River is a solventless extraction company. They have actually refined the process and technology of bringing solventless, i.e. chemical-free production and products to shelves in a scaled manner. So solventless has been around for a very long time, but getting it through the pipe and actually on shelves at scale is a completely different animal. So Blue River is a fabulous company, and all of these that we're able to sell currently, being Blue River, and slang are currently on our shelves are doing extremely well. Finally, we started having the conversation also internally about how are we going to penetrate these other markets? So it's one thing when you're operating in your home state, right? I mean, we can all be clear about that, right? I'm born and raised Floridian. We've got connectivity back to that market. But when you're going into other markets that it's not your backyard, how are you creating that authentic connection with the community in which you're going into? And I will tell you that this is a very community-driven and emotionally driven space. So we all come to the cannabis with some sort of preconceived notion and an emotional response, and we want to connect with that emotional response. So again, taking a page from Whole Foods, when Whole Foods goes into a market, they have a local fair. They invite local purveyors to come in and compete for shelf space. We said, wouldn't that be interesting if we offered the same kind of opportunity? There are lots of folks that have been in cannabis for a very long time in local markets that just don't have the expertise, maybe the capital, et cetera, to really to compete as a full-scale producer. What if we go in and we seek those relationships out? And so we did that with Sunshine Cannabis. They were our first entree into this. Sunshine Cannabis guys are tie-dye. They have been involved in advocacy work for a very long time in the state of Florida. And actually, they're donating a portion of their royalty to a recreational initiative in the state of Florida. They bring in a completely different group of customers, quite frankly, to the Trulieve brand. I say they up our street cred on the daily. And we have been embraced by that part of the community now in Florida. We actually were just at the Cannabis Business Awards in Miami on Sunday night, and we were named best dispensary in the state, and Sunshine Cannabis was named the most valuable brand. So that's been a fantastic partnership that we hope to replicate in other markets. And then finally, when we talk about wholesale, so we're very excited about wholesale. Currently, this is not allowable in Florida, but we will be launching wholesale in Massachusetts next year. So we're working on a brand segmentation platform currently to think about how our house of brands, how we're addressing the wholesale opportunity and thinking about how our certain product lines will speak to certain types of customers. So to date, really brands we feel have been very focused on, this is the coolest vape pen ever. You know, you should buy this vape pen because it hits the hardest or it has this formulation. It's been very product specific. It hasn't necessarily been around who a particular consumer is. And we think that there's a lot of room there to speak to certain demographics and to speak to certain types of consumers. And so we're going through that exercise now to develop certain lines that we think would play well in the wholesale opportunity. So we're excited about that as well. So we serve over 5,000 patients in our stores daily. We do have an extremely robust retail network in Florida. Our retail strategy has certainly changed and evolved over time. So the first, we are headquartered up in Tallahassee. So for those of you who aren't familiar with Florida, that's about as close to the furthest point from Miami as possible in the state of Florida. And we knew from the very beginning, again, I mentioned that we launched delivery. So we were delivering from Tallahassee all 8 hours down to Key West. So we needed to get a distribution network up and running very quickly. And so the first point of business was to get retail stores open for distribution purposes. Second, what we did is we overlaid and looked at physician activity, because if you don't have physicians, you don't have patients and you don't have sales. And so it was important for us to look at doctor activity, and we located stores in those areas where doctors were opening practices surrounding cannabis, or physicians were incorporating cannabis ordering into their existing practices. Now we are also looking at not only infilling where we have increased demand, and there are still some communities. So in Florida, you can actually, as a local government, you can ban cannabis completely, or you can zone us like pharmacy. So we still have some communities that have bans out there. So we are going into those communities as those bans are lifted. We actually sponsor a Lift the Ban tour that goes from community to community to lobby and work with local governments on understanding the value of cannabis businesses in their local communities. But also we're thinking now about what does recreational cannabis look like in Florida, and where would we want to be positioned and postured from a retail perspective if and when that happens. There are currently 2 recreational initiatives that are pending Supreme Court review in Florida. If those pass and if they garner the appropriate number of signatures, we could see one or both on the ballot in 2020. And so we are thinking strategically about that. So as an example, our store opening today is in Panama City Beach. We just opened a store in Key West. We just opened a second store in Orlando. So we are thinking strategically about where retail is placed in the customer base in which they could potentially serve. We were the first cannabis dispensary in 19 of 29 of our municipalities. And so, what we're doing is we're really, we'd like to be the company that when you think cannabis, you think Trulieve. And we've worked very hard to work on that mind share capture rate in the state of Florida. I will say though, because I'm asked often about that first mover advantage, and while it absolutely, it has been very important to our success, I will note that in the markets where we have the most competition, we actually are the most successful. So it's not only about opening a store, it's also about the level of customer service, product lines, quality of products that you have available that really continue to reinforce brand and continue to allow us to retain our dominant position in Florida. In terms of home delivery, we do next day delivery throughout most of the state. We have a fleet of 79 vehicles that operate on a daily basis and that service the state. I will say that only 6% of purchases currently are delivered. And so just as a reminder, this isn't Amazon. We can't leave the package on your doorway. You have to be there. You have to sign for it. There is a transaction that has to occur with the dispensation. And so I personally believe that until that changes, delivery is going to continue to be a difficult model. I know that there's a lot of talk about delivery and the fact that we all are all creatures of becoming more and more creatures of delivery. But what we're seeing is that people still, certainly new patients, want to come in and have a conversation around products. They want to interact with folks. And then secondly, they just want to be in control of their time. And so what we have seen a tremendous uptick in is our in-store pickup. So we have express windows in all of our stores. So you can call, you can pre-order, you get a text message when your order is ready. You're in and out of our store in about 10 minutes. And so being able to control that time element is very important, and right now seems to be the more convenient or preferred method. We do have a fully staffed call center. Again, meeting the customer where they are, making sure that we are known for customer service. If you have a question, we want to be there and answer it for you. This is very unusual, and as normal as this is in a lot of other retail channels, we are setting the standard within the cannabis space. And so we get approximately 3,000 calls a day. Remember, in Florida, we've got somewhat of an older demographic. So, the folks, particularly in the over 60 crowd, not everyone is comfortable with a laptop or with an online ordering platform. And so for them to be able to pick up the phone and actually have a voice on the other end has been very important, and we consider a strategic advantage. Also in that call center, we answer all of our online chats. We also have a goal to answer any Facebook or social messaging messages within about 5 minutes. Speaking of social engagement, we have a very robust and engaged customer base. Again, these are our Trulievers. One of my favorite statistics here is that we have a 72% customer opt-in rate on email. That is really high. And we have actually a 40% open rate. So people want to hear from us. Now we're very specific in terms of content. We're making sure that we're giving them valuable information. We're not an over emailer, I would say, but we do have a very engaged customer base. We have over 75,000 followers on Facebook, 26,000 on Twitter, and 7,000 on Twitter, and 26,000 on Instagram. This is all organic. So just understand that we're not out there. We're not able to purchase ads on Facebook or on these platforms. So this is all organic growth. We have over 214,000 patients, and our patients are very loyal and they're very sticky. And what I mean by that is they are coming in to see us approximately twice a month. Their average spend is between $142 and $145 per time they visit us. As a reminder, we are in an all cash or we have an app actually that folks can pay through business. We do have a banking relationship, I think it's important to say, with armored car pickup multiple times per week at our stores. So that's not an issue for us. We do have education, and I just want to spend a minute on this because it is something that's a little bit overlooked. So educating folks in terms of what's available, where they can go, and how they can successfully enter the program and find relief is a key part of what we do. We have a community education team that goes out and visits physicians, but they also attend community events. And creating these feedback loops back to our organization is another kind of, I'll call it, secret to our success. We're able to take that customer feedback, whether it comes in through our community educators, whether it comes through our call center, and actually make adjustments to our online experience, to the product lines that we offer, to hardware that we may offer that folks are having a hard time with packaging. We have incorporated real change into our business by listening to our customers. Again, something that sounds so simple, but is often overlooked, particularly in our industry. We had over 1 million face-to-face contacts in 2018. We do have a Trulieve loyalty program, of course, where you can earn points for purchases, and we do special contests and events with them. And then, of course, moving forward. And so we did, I think it was on the board earlier today, a debt offering earlier in the year, along with a couple of sale leasebacks that we can talk about. So the debt offering was approximately $70 million US. We also did a up to $40 million sale leaseback with IIPR, the $17 million sale leaseback with IIPR as well. And so that really was done to put us in a position to successfully achieve our metrics for guidance that we'll go over in a moment. And again, that's to cover growth in Massachusetts. So our facility in Massachusetts, which we can talk about, is going to be about approximately 140,000 square feet. We're focusing on Massachusetts on the cultivation part of the supply chain because any of you that are familiar with Massachusetts, there is a significant supply issue right now. The wholesale market in Massachusetts is very robust, I will say, because product is just hard to get. And so we knew that what we didn't want to do in Massachusetts is what a lot of folks did, which is to rush to retail without the supply chain being built. So we're seeing that actually happen and play out in our home state of Florida, where folks have opened retail stores, and you go in and there's 3 products to choose from. What does that do? It destroys that company's brand, and second, it drives those customers right back into a Trulieve where there's 250 products to choose from. And so we knew that was really important to make sure that we could supply our own stores in Massachusetts, but also, and importantly, provide a source of revenue and profitability for us in Massachusetts quickly while we're building out the retail segment of our business there. Moving to California and Connecticut. California, we opened a dispensary in California in the Palm Springs area. Really, California for us is an R&D location. I talked about that East versus West mentality. So us getting into the market in California to understand firsthand, what are the brands that are resonating with customers? What do the distribution channels look like? How, what plays here, what doesn't play here, store layout, and really, again, engaging directly with customers in that market. In Connecticut, we closed on the Healing Corner in Connecticut. Connecticut is a fantastic market. It is very strictly medical right now, although we've heard from the governor, of course, in Connecticut, along with several governors in that area, that they are interested in transitioning to recreational. I should note that in Connecticut, we did also purchase with that closing a parcel adjacent to that dispensary, which we're currently demoing and getting pad ready in the event that there are expansion opportunities with some regulatory changes in Connecticut. So we're excited about that market. That store continues to outpace the competitors with an increasingly competitive market. That store continues to gain market share, which we just call the Trulieve way. So excited about Connecticut. These are our operation results for 2019 on a quarter-over-quarter basis. So you can see that we ended June with $57.9 million in revenue and $31.6 million in EBITDA. We are continuing to grow, and we'll be announcing Q3 financials within the middle of the month. So stay tuned for that. And in Q1, we announced updated guidance. So this is guidance that we feel very strongly about. We are a very model-specific and data-driven company. And so behind this guidance, there are a lot of data points. But again, ending 2019, we plan to exit 2019 between $220 and $240 million of revenue, $95 million to $105 million in EBITDA, moving to 2020 and with 380 to 400, 140 to 160 in EBITDA. Big changes between 2019 and 2020. We'll certainly have Massachusetts coming on board at some point within 2020. That also explains the slight degradation in EBITDA margin. So to be clear, when you move from a fully vertical retail-oriented supply chain into a wholesale supplemented market, that's where that compression comes in. Also interesting, and I think we say it right here, in terms of what is included in our guidance, we did see, of course, in 2019, increased patient growth due to smokable flower coming online in March in Florida. Our guidance does not contemplate anything which we do not know now. So it does not include edibles. It does not include any sort of recreational initiatives in any of our states that we're in. It quite simply is just the market and the state of as we know it currently. I think it is important to say that with the previous rounds that we have done earlier this year, again with that sale leaseback and the previous debt raise, we are funded from a CapEx perspective to meet these numbers. And so we're excited about additional opportunities that may be presenting themselves, but we feel like in a very strong position to again continue to capture that strong growth rate that we know exists in Florida. And then also continue to look ahead at opportunities as they present themselves. So appreciate your time. We're going to, for questions, so we can make sure that we answer them all, we're going to ask that folks email them in to our IR person, Lynn Ritchie. So that's Lynn, LYNN.Ritchie, RICCI @trulieve.com. And appreciate you guys' time today. Thanks so much. So everybody, I hope you enjoyed your first presentation. Our next presenter is Kellen O'Keefe, the Chief Strategy Officer for Flower One Holdings. Kellen, when you're ready.
Thank you very much, Rachel. Can you guys hear me okay? Just making sure. Awesome. Well, thank you guys again for coming. My name is Kellen O'Keefe. I'm the Chief Strategy Officer of Flower One. We are the largest cultivator and producer and manufacturer and full-service brand fulfillment partner in the state of Nevada and soon to be California and beyond. We have a very unique history at Flower One that stems from years of operational excellence in the greenhouse space. Our team has a proven track record of delivering some of the highest performing and yielding greenhouses in the world. We have a very unique business model that focuses on being a truly full service, end-to-end, vertically integrated brand fulfillment partner. Unlike other companies, we're not focused on retail. We are focused on truly providing a seed to shelf solution for both brands and retailers alike. And that makes Flower One very different from other MSOs, or what we now refer to us as a multi-state brand operator, which again, sorry for the acronyms, but again, I think it's important to differentiate where Flower One is comparatively to other what are referred to as vertically integrated cannabis companies. The picture you see behind us, probably more cannabis than most of us have seen in one individual photo. That photo is actually from August of 2019. Again, this greenhouse is the largest producing in the state of Nevada. and as you can see, no small feat. I'll get through the disclaimers. This timeline here takes us from the start of construction at Flower One and shows what we were able to accomplish in a very, very short period of time. In less than a year and a half, we took the site from what was a cucumber facility producing cocktail cucumbers for Costco in North Las Vegas into what is, again, now the largest producing facility in the state of Nevada. We're producing roughly 3,000 to 5,000 pounds a week of flower testing above 30% out of a greenhouse. This is an incredible accomplishment, and the time and the speed in which we were able to deliver this and convert this facility from a cucumber facility to the cannabis facility that you see, again, is, I believe, a record in the world of cannabis and something that we're incredibly proud of. We just now recently were able to license the facility in Q3, for example, and we have seen incredible results. One of our brand partners, for example, in Old Pal, is now the number one flower brand in the state of Nevada. We've done that again in just 2 to 3 months of the greenhouse actually being licensed to sell products. So again, taking a look at what we offer, we are not vertically integrated. We provide everything from cultivation, extraction, manufacturing, and then on to distribution and sales and marketing. We do this to be able to service both the retailers and the brands. Most brands in cannabis are unable to find scalable fulfillment partners or contract manufacturing that actually suits their needs. Oftentimes they're competing with vertically integrated companies that are looking to launch their own brands. What we're able to do is, again, offer a solution that doesn't compete and provides a service both to the brands and retailers alike. Again, taking a look at the value proposition that we're able to offer to both the brands and the retailers. From a brand standpoint, we can offer speed and ease of entry into the market. We eliminate the high cost of capital that would be required for a brand to enter a market. So a brand partner can come to Nevada and we can bring them to market in probably 2 to 3 months, mostly based on the time it takes them to get their packaging approved. And we can do so simply at the cost of their marketing or branding expenses coming into the market. So you're looking at, several $100,000 versus potentially what could be up to $15 to $20 million for a brand to attempt to come into a state and vertically integrate. And then we likewise offer a very strong value proposition to retailers. Not only are we able to offer them the best brands in the space, but we're also able to offer them white label solutions. Those white label solutions allow us to manufacture products such as house brands for the leading retailers in the space. And in exchange for doing so, they will continue to support all of Flower One's offerings. That includes the premium brands that we bring to market, as well as their own house brands. And then third and finally, we also, due to our large scale production, have the ability to offer wholesale biomass and distillate. That gives us an opportunity to, again, service the vertically integrated MSOs or large scale operators that have some form of vertical integration, but have still not been able to scale their cultivation. So in a lot of cases, they actually want to procure biomass in order to be able to make products of their own. So we actually have kind of 3 tiers or 3 buckets, if you will, of product, ranging from the branded product at the top, where we capture the most margin, to that middle category, which is, again, white label products for the retailers. And then third, and in the final category, we have the opportunity to do wholesale. So this is very attractive for us and gives us a unique ability to service both brands and retailers without competing with them. So I mentioned a little bit before, we have over 25 years of experience building some of the largest greenhouses in the world. This allows us to take a very, very strategic look at the way we look at markets and where we decide to operate. Not only are we taking into account the cannabis market itself, but we're looking at the population, we're looking at the market dynamics, the number of licenses, and the size of the addressable market. And then beyond that, we take a very, very close look at the sites themselves. Things like power, tax, accessibility to labor. All of these things are very, very important to us. And I think I didn't mention climate, which of course many cannabis operators are learning is of course very, very important to ability to operate a greenhouse. So Taking a look at where we've started and where we're going, between California and Nevada, we believe we are in two of the most significant cannabis markets in the world. Not only due to the size of those markets, but we think the markets themselves are very attractive and have a very specific need for what we're bringing. So very, very excited to be, again, the largest producer in Nevada, and hopefully be able to take that again and replicate that in California, as well as some of the eastern states that we're taking a very close look at. There are market dynamics in eastern states where you have a number of dispensaries coming online, a limited amount of cultivation, or in some cases a shortage of flower, which again is something that we're going to take a very, very close look at Flower One, given our positioning and what we're able to produce. So why Nevada? People often ask us why we started with Nevada. I think Nevada is one of the most attractive, if not the most attractive cannabis market in the world, due to not only the size of the market, the addressable population, if you include tourists, but also due to the market dynamics. There's a limited number of licenses in Nevada, and for us, it was extremely attractive because there were absolutely no commercial greenhouses in the state of Nevada either. So as the first greenhouse operator in the state, we have the ability to produce at a quality and a price point that is significantly lower than our competition in the state. Year-over-year market growth in Nevada is over 20%. We expect 2024 cannabis sales to be north of $1.5 billion. And I believe the 2030 number is so alarming, we decided to take it off. But we actually believe that Nevada is going to be very, very competitive and close to California relative to the revenue that the program is able to generate. So this is a little bit of a summary of our actual footprint in Nevada. We have a 400,000 square foot greenhouse, as you see here today. That is our flagship facility. It is attached to a brand new 55,000 square foot production facility. That is the largest production facility in the state. And again, gives us the ability to process using a variety of different extraction methods to convert that into a wide variety of finished products. Due to our acquisition of NLVO, we were also able to acquire a small indoor facility. That indoor facility is currently 25,000 square feet today, and we have plans to actually add a 40 to 50,000 square foot commercial kitchen and manufacturing space onto that site as well. So we'll be expanding our production to include about 50 to 60,000 more square feet of commercial kitchen space. That will give us the ability to continue to produce for a number of leading edible brands in the space, as well as bring beverage capabilities and beverage lineups to the state of Nevada as well. So we're very excited to get that online. Currently today, we have a long list of brand partners that are waiting for us to onboard these facilities to enter the market. Very, very exciting times for us. We have, as you can see at the end, a very growing list of brand partners that I'll get into here in just a moment. This is a little busy to read, and I won't stick on it long because I understand this was not designed necessarily for you guys to be able to read in the back of the room. But just a few key stats that I think are very, very important for everyone to recognize and really distinguish Flower One from the competition. Our annual production is at a minimum of around 140,000 pounds. We can easily add to that or step on the gas, if you will, and convert that to somewhere like 270,000 pounds. So we have a significant production capacity. And then again, to really note right to the right of that is our average cash cost per gram. At 45 cents, we are lower than any public company in cannabis. And we believe, again, that is the lowest cost of production in North America. Really good problem to have, one that's kind of unique to us. We went over our original design capacity by 85%. That means we actually expected to produce less cannabis, to have more die-off, and again, a good problem to have. We ended up with very little of that. And that resulted in us having some excess supply in the beginning relative to things like our drying capacity and others. So we've had to make unique, fast adjustments and are in the process and have done so very quickly to be able to accommodate all of the flower that we have. And again, that's the key for us to onboarding all of our brand partners and building out our commercial kitchen, which again gives us more outlets for all of that product. One key fact also I'll point out here is our relationship with the Dennis Group. For those of you that are familiar, the Dennis Group is one of the most successful design and build firms in the country, producing facilities for Kraft Foods, Procter & Gamble, Diageo, and the likes. So we're very proud to have an exclusive with them in cannabis that has allowed us to execute on that build and design as quickly as we did. And we're also now working with them on our new projects for states like California and beyond. And last and not least, again, the distribution, sales, and marketing, which I also kind of incorporate back into the branding in our brand partnership program. Our goal is to make sure that we are working with only the best brands in cannabis. We want to work with the brands that capture and have the most demand, the most significant demand across all markets, and also capture the most significant margin, right? So brands have to do what brands do, which is, capture more than that of a generic product. And so we have targeted and found and are now working with the best brands in the space in every category and at nearly every price point. And that's something that's very important to us as we look to offer service both to the retailers and then again helping those brands scale from market to market. Some of the brands we've been fortunate enough to work with or in the process of working with, actually all of these are now official brand partners. As I mentioned, Old Pal, the #1 flower brand in the state of Nevada, a very, very successful brand out of California. We've been very fortunate to work with them, and they've been a great launch pad for us for the greenhouse. We also have several other California brands, Palms, now Cookies coming on board, 22 Red. Some of these are, I think, in Cookies, for example, you have one of the most in-demand cannabis brands in the world. We've seen incredible traction with that brand. Their merchandise alone does over $25 million in sales on an annual basis. And one of the things I make jokes about relative to brand strength from my previous life in working with other large CPG brands is you look at fundamental sales, right, or accessory sales, and merchandise is one of them. And then the other thing that you look at for really a mark of or a badge value for the brand is tattoos. It's a crazy thing. It's crazy to think of, but in reality, there are thousands of people that have thousands of people with Cookies tattoos or the logo tattooed all over their body. And these are not just die-hard consumers, but in fact, in one case, we found a Latin American pop star with over 1 million followers on Instagram was the largest merchandise producer and has several tattoos of the brand all over himself. So an international brand that has, again, a significant demand is tied to premium genetics. So all very exciting things. And what's really special about that from a Flower One perspective is that Cookies takes their production partners very seriously, and they will only put their stamp on flower that they believe is of a certain quality. And for Flower One to be able to go and find the best genetics partner and the best brand in the world and get their stamp of approval to enter a new market is a very meaningful accomplishment and one that I think the team at Flower One and myself are very proud of. As you can see, some brands will come and go. We recognize that. We recognize that this is very early in the cannabis brand landscape. And again, our goal is to set up a program that services the brands that are selling the most and create the most demand. So we will, without question, have a constantly rotating circle of brands or group of brands, but we hope that we pick some winners that are able to come from market to market with us, or the ones that have already shown their ability to go from market to market and create significant demand. So this is a little bit of insight into what we refer to as finished goods production economics. And this is a very clean snapshot as to what it looks like to be a cultivator or wholesaler of biomass or a liter of distillate versus converting that product into finished packaged goods, such as a vape cartridge or a gummy or a quick strip. As you can see, 1 liter of distillate, the current wholesale price for a liter of distillate, to give you perspective, in Nevada is somewhere between probably $12,000 and $14,000 a liter. So as attractive as it is to sell that at significant markup from our $5,000 cost, as you can see, if we convert that into vape cartridges or gummies or quick strips, an even lower dose edible, we're able to capture significantly more margin and gross margin dollars, which is of course very important to us. This is a little bit of a peek into our sales. We're not providing actual guidance, but there are some clues on here that would give one insight into what the launch of our greenhouse facility has done for us from a sales perspective and where we expect to go as we continue to launch additional brands. Part of that, again, is due to the fact that we are bringing some of the biggest brands in cannabis into the market, and again expanding our capabilities to make a wider variety of products versus what we currently make or have made in the past. So that will continue to grow month over month as we launch more and more brands, and we expect sales to ramp accordingly. I'd love to show you guys a little video if we can, and let's make sure. Let's see. Oh, okay. No. Sorry, guys. I might need a little bit of help here. It just goes to the next page. Well, skip that page, and it's what it is, and I would welcome you all to check out flower1.com if you have a moment. It's a minute-and-a-half video that we think shows you, at least gives you a glimpse into our facility. I would encourage you all to watch it if you get the opportunity. Yes, so all good, but again, moving on to California. So some of you might have seen that our plans to expand beyond Nevada were announced recently. We do have plans to go into the state of California, given that it's the largest cannabis market in the world. We think it's important to be there. It's important for our brands that we are there as well. And that's something that oftentimes people are a little bit taken back by. Doesn't California have endless supply? Isn't that, no. The reality is California does not. If you look at any leaders in the brand categories in California, they are all challenged by supply. They've only been able to scale based on their abilities to navigate the black market. And that has been a real challenge. And now that you look to the top 5 brand partners that are all looking to, or the top 5 brands, I should say, in the state of California, all of them are looking for consistent supply. On a number of cases, and one in particular, one brand has over 20 people on their procurement team buying product for one brand to scale in the state. We believe that's outrageous. That's a very difficult way to scale a business. Not to mention, all of that product is inconsistent. It's not priced the same every time. It's not the same material every time. Testing results are a problem. So we're seeing a number of issues that lead us to believe that California is the perfect market for us to enter, and our brand partners continue to drive that fact home for us and actually tell us we can't get there fast enough. So we have plans to get to California and get to California quickly. We're going to do something special in California that will give us the ability to replicate our efforts with the greenhouse, which again will produce the absolute premium with regards to the quality. Oftentimes you hear a lot about indoor versus greenhouse. At Flower One, we believe that the greenhouse will actually surpass indoor when it comes to quality. The power of the sun with a fully controlled environment should give us the ability to do that. There's no question it will continue to take time, but what I've seen in the last few months in Nevada alone make me feel very comfortable that we're well on our way to being able to do so. And obviously when it comes to the cost of production, as you've seen, the cost of production in a greenhouse for that hopefully comparable quality is going to be significantly lower, making it a very difficult or an easy choice, in my opinion, for consumers to pick a comparable product that is priced probably half the price. In addition to California being special for the size of the market and the demand there, it also has a couple of variables or factors that are very special for us. We have the ability to do outdoor in California in the Central Coast, in addition to our high-quality greenhouse or high-tech greenhouse that will give us the ability to produce biomass at the lowest possible price point, in addition to having the premium quality levels. So by having both of those both of those cultivation methods available to us, we believe that we will without question be the lowest cost supplier of both biomass and brand fulfillment. So in looking at the size of California, again, largest cannabis market in the world, and we believe that we're very well positioned to come service that market with our offering and our brand partners. Little look into our team, again, composed of some of the most accomplished greenhouse operators in the world. Myself as a cannabis expert and veteran, I believe we've joined together some of the most talented people in cannabis to be able to bring Flower One to life and bring our value proposition to the brands alike. So I think with that, I would love to open it up to Q&A and appreciate. I think we have one question coming from the first. The starter will be the OTC, and then we'll have.
Yeah, so we have one question from the Virtual Investor Conference. How competitive is your 45-cent cost per gram?
I believe that is the lowest cost recorded in North America, and by any public company that we are aware of. So from our standpoint, it is in fact the lowest and most competitive.
Yeah, I was going to ask about that too. It's very impressive, and I think a lot lower than even some of the really large Canadian companies. So what's your secret? How do you get that low cost?
Our secret is in our team, and again, our team's ability to design and operate what I believe to be the most high-tech greenhouses in the world. So our facility in Nevada was a conversion, so it probably is missing some of the technical components that our custom build in California will have. But nevertheless, I still believe it is the most high-tech facility that I have walked through in all of cannabis, especially when you take production into account. Because I do believe that in cannabis, we're seeing a lot of money spent to make something appear, fancy or shiny or automated. But in fact, I believe it's our team's use of technology and human capital that makes us really special. And again, I really believe that goes into our culture as an organization, because it is the people that make the business work. And we believe we have a culture that's second to none in cannabis as well.
But something you can recreate in other states as well.
Absolutely.
It's nothing about Nevada in particular.
No, in fact, Nevada would probably be more challenging, for a variety of reasons, from climate to others, than actually California will be for us.
Thanks. Awesome. Thanks.
Hello, just a question. Have you seen any change in your vaping sales since the vaping scare?
We have not, in particular. In Nevada, we have not seen it dip at all. And I have a lot of insight into the leading dispensaries and their numbers as a partner in some of those companies. But what we've seen is that vape sales are not actually lowering the total sales at all, but actually making a transition from vaporizer sales into flower and edibles. So while we saw that, potentially somewhere, what I'm hearing across the board is a 5 to 10% drop in California in vape sales, that was made up for in both the flower category and the edible and beverage categories. So mostly a transition. I believe it's a real opportunity for the legal market to differentiate itself from the black market. Most of the concerns around VapeGate really came from whether it was the tobacco industry and very organized campaign attacks to discredit members within the tobacco industry, or what are actually real significant problems on the black market. And so I just participated in a public service announcement to try to encourage people to buy legally. I believe that's really important. There's no question, in order to trust what you're consuming, it needs to be regulated and tested. And I believe that this is an incredible opportunity for the industry to kind of join forces and try to create regulations in the name of consumer protection. Oh, sorry, you passed one guy there.
Yeah, I'm like fascinated or always skeptical of some of the market stats. You said that this is going to be a $30 billion U.S. market in 2024. Is that correct? Is that a stat you had at the beginning?
We're not making these stats up. We're citing references.
I'm not saying that, but I just want to understand.
Yeah, I think it's RQ or Kellen.
A couple questions. What's your addressable or accessible piece of that 30 billion, and any idea what that market is today in comparison to the 30 billion you expect?
I could go into California and Nevada. So 2019 cannabis sales in Nevada are on track, or we're over 639 million. I believe they've already passed a run rate for 750 million this year. And again, if you look at California, over 3.1 billion in 2019 for California, and what is our potential within those states?
Well, when you say when you had a slide that said 30 billion in 2024, I thought in the U.S. And in the beginning, Jason and Richard talked about, and this could be totally apples and oranges, and I'm not paying close enough attention. They talked about a 60 billion market that used to be 100 billion. Now they could have been talking something completely different. They're talking worldwide. Sure. But I'm trying to, every time I hear a presentation, frankly, I see different market stats, and I just want to get on the same page.
I think they were talking about. Well,
yeah. That's what I thought. And so there was 200 companies, 100. So that's on average, 2 billion market cap per company. That's pretty large.
I actually believe they're talking about the size of the total cannabis market, but a lot of times where you don't get a clear answer is whether or not that is the legal cannabis market, or that whether or not that number includes the black market.
So you're talking about your cultivation slice of it. You're talking all these market stats, right? Your addressable piece. Right, because you're not seed to sale.
No,
right?
Correct. So what we're in that particular stat, to be clear, that stat is, I believe, addressing the national cannabis market.
Excellent. All right, thank you.
The question I would really ask is, if I were really trying to understand that number, does that number include both the legal market and the black market, or just the legal market? Because it's an ARC view or a BDS analytics stat, my guess is that is the estimate for the legal market. I would guess that the black market included would be somewhere around that 70 to 80 billion dollar number you hear globally.
Final question. So Kellen, really impressive stats on the production cost, but was just curious about the quality of that.
Sure.
I think you'd mentioned a potency.
Yes,
factor that was, I almost fell out of my seat. Can you just mention that one more time?
Yes, we have flower that's tested at 34% and multiple strains testing above 30% out of a greenhouse.
Consistent.
That's
amazing. And so with an Old Pal, which is kind of known in California to be the Budweiser, the Pabst Blue Ribbon, what are you putting in their packaging for selling in Nevada? You putting in the 30%?
To be clear, no. Again, because Old Pal is a value brand for us, they would not be getting the most expensive product we sell, but rather, towards the more affordable. So their product would probably be in the, more like the 18 to 24% range, somewhere in that range.
Still really good.
Yeah, still really good. And look, as a cannabis connoisseur, what we've seen is markets are heavily weighted or driven by potency in the beginning, and then actually move away from potency into quality and other, measuring terpenes and flavors and other effects.
Did you have a good time when you remember having that brand?
Precisely, yes. That's true. That's true as well.
And in Vegas, everyone's having a good time.
Right. And so we're working to make sure that we continue to have high potency product and fill out the demand for all of that product, but also have a diverse set of strains and flavors that actually cater to all of the different brands and all of the different taste palettes and profiles. So we're looking to be diversified, not just volume of one particular type. All set?
All set.
Great. Thank you very much, guys. Appreciate it.
Thank you, Kellen. So at this time, we do have lunch. We also have a panel at 12:15. So enjoy, and we'd love to see you for the panel.
Hey guys, this is Rich from Rich to Be Live. So, hope you guys have been enjoying the show. Seems like there is a lot of huge opportunities coming in the cannabis sector, and wow, The opportunity in America is so big. The opportunity in America is just so big right now. I can't tell you guys how excited I am for this sector. And I know it's been a roller coaster ride, and I know there's been ups and downs, but man, I truly believe there's an opportunity of a lifetime here for us if we can take advantage of the research that we're doing now and learn about the best companies early before they become the next Amazons. Who is going to be the Amazon of cannabis? Will it be Aurora Cannabis? Will it be Afria? Will it be Trulieve? Will it be Curaleaf? Who will it be? I want to know what you guys think. What will be the next? Who's going to be the Google? Who's going to be... Remember they said, oh, there's an internet bubble that burst. And out of that bubble, what we get? Amazon, Shopify, Facebook, Google, giants. They came out of the bubble. Now they own the world. So there's another bubble they're saying is bursting. The cannabis sector. Fortunes will be made. Fortunes will be lost, but fortunes will also be made. And then for the people that actually think long term and start positioning themselves, including myself, in this new sector, in the best companies, the most well-capitalized companies with the most revenue, the companies with the less and the least amount of debt, companies that are profitable, companies that are scalable, companies that have a strong management team, companies that have a good share structure. These are all vital, but most importantly, you have to have a good product. You have to have a product that people want to even have a chance for them to keep coming back and buying your product. Or you have to have a technology that people are going to need, like extraction companies like MetaPharm Labs and Valens Growworks. Two giant extraction companies. So there's so much opportunity in the cannabis sector, and it might not happen overnight. And Rome was never built in a day, and success was never created overnight by anybody. Sometimes it happens. There are one-hit wonders here and there, but for the most part, you hear stories of people when they become successful, they studied something really hard, learned about it, watched it for a long time, took their lumps, and eventually they exploded. Well, which will be the best cannabis companies that you want to position yourselves in? Because this is going to be a huge sector that is going to be a global sector that is going to generate billionaires, trillionaires, millionaires all over the world. The question is, do you want to be one of them? And I'm not just talking about buying stocks. I'm not just talking about buying stocks. I'm also talking about more than just stocks. I'm talking about jobs in the cannabis sector. There are jobs everywhere being created in the cannabis sector, all over the world legally now. You never used to be able to invest in it. That was illegal. Now that's legal. We can buy their stocks. You can invest in these companies legally. There was always risk in investing in cannabis when it was illegal. Now it's legal and there's still risk involved in investing in cannabis. We still have to identify who are the best companies, and we got to get better at identifying who are the best companies, who have the most upside, have the best share structures, the most amount of revenue, the least amount of debt, the best management team, the best product, the best customer service. This is what's going to identify and determine who is the biggest and the best. A lot of people keep saying there's going to be 5 companies. I don't think you can do it like that. There's so many people worldwide. The only way to do this properly is to have a lot of companies, a lot of moving parts. Now, yes, eventually some of these giants might be able to buy out some of these smaller companies. But I think initially for this to happen properly, it's going to have to, in my opinion, it's going to have to be a lot of hands. Many hands make light work. It's impossible for one company to try to do this all. There's so many moving parts. We're talking about extraction. We're talking about cannabis-infused beverages. We're talking about flower. We're talking about CBD. We're talking about hemp, which you can pretty much turn hemp now into anything. So the upside is just tremendous, in my opinion. The upside is absolutely tremendous. No, I'm not suggesting anybody should laugh at red. I'm suggesting that everyone recognize that before the cannabis sector exploded, everybody was talking about gold. Everyone was talking about oil and gas. Everyone was talking about tech stocks. And then when cannabis exploded and crypto exploded, nobody talked about anything other than cannabis and crypto. Then what happened was crypto crashed, and then cannabis now has followed and crashed. Since then, crypto has made a run, a big run. And now crypto's kind of come back down to life, but they're still way up since it started in another growing, robust industry. Cannabis is another growing, legalized, from illegal black market to legalized industry on a global scale. It will only get bigger. And the biggest and the best companies will only get better. They will only get more capitalized, better capitalized. The Safe Banking Act will get approved eventually. And when all of this happens, all of these catalysts plus the growth of the sector, the maturity of investors, understanding which are the best companies for us to invest in, which companies to stay away from, how to be strategic and how to get in and out of our trades in a sector that is very volatile, very, very high highs, very, very low lows. On the very, very low lows, that's the time when the rich get richer. Because when everybody else is decimated, the rich are buying. And then on the high highs, when everybody else is buying, trying to make money because everything is so high, because that's how people make money, then guess what? That's when the rich are selling and then they take it all down again. That's the game in the market. And the market makers play the game with the elite and the hedge funds and the institutions that all understand exactly what's going on. They're always 2 steps ahead because the market is all knowing. So if you look at the charts of all the cannabis stocks and the cannabis sector over the last 3 years, you will see in 2017 we had an explosion and then a crash. In 2018 we had an explosion and a crash. In 2019 we've had an explosion and then a crash. This is really nothing new. It's just an extended crash to make people panic more. But what we have to do is we have to identify the best. That's why I do these videos. So that I could learn just like you guys, and then as a community we can talk about these companies and determine, what do we think? Who should we buy? Who should we stay away from? I like it when people are hating on me and saying, hey, stay away from Zenabis this. I want to know, why should I stay away? Because I see a company that has product that people are buying. I see a company that has huge facilities. I also see a stock that's getting cratered and decimated. So it's crazy. The sector's nuts, right? The sector's just nuts. Makes it very risky. High stakes. High stakes. Big risk, big reward. No, man. Bitcoin is going to be the next big thing. I totally disagree with you there, Sheldon, saying that Bitcoin will be nothing in a few years. Like, are you serious right now? Unless the government gets in on it. The government, everybody's getting in on it. You have to understand, there's only so many Bitcoin in the world. There's only like 21 million Bitcoin. So once the 21 million Bitcoin are acquired by everyone in the world, well then guess what? There's no more Bitcoin. At that point, the price of Bitcoin can go as high as those holders want it to go. Supply and demand, folks. Supply and demand. When companies are down and they're beat down, that's when you buy them. People can beat on me all they want. At the end of the day, I predicted the cannabis sector would explode in 2017. I remember in 2017, everyone was calling me an idiot. Oh, the sector is filled with scammers and it's never going to get legalized. And then it got legalized in Canada. And legalization's been a shit show. Legalization's been a shit show. Bitcoin is going to be so big. Bitcoin is so big. The ability for me to send money to anyone anywhere in the world, whether they have a bank account or not, and then they can get that money through their phone, okay? And then they can use that money and I can literally send it to them instantly and almost at no fees, depending on who you're using. Little to no fees. That is a game changer. People can send money anywhere in the world to their family, their friends, their loved ones. It's a game changer. I'm sorry. It's a game changer. I don't care what anybody says. It's a game changer. Just like Baby. I told you guys Baby was a beast and the stock went up. I told everybody Baby was a beast and the stock went up. Why? It's a game changer. They have an alternative to milk for babies. Who doesn't want their baby feeding properly, eating properly? Who wants to feed milk, something with pesticides, to their babies? Like, I'm sure cannabis will eventually create an alternative to milk. Cannabis, in one way or another, will create an alternative to everything. So when you see that the sector is down, what it really is a buying opportunity. Not for the shitty companies with tons of debt, the companies with tons of money. The companies with tons of money, products that people want. This is what we have to identify as a community. We need to start testing these products of the licensed LPs to determine whether or not their products are good or not. And that's what will be the true indicator in the future of who's going to last. Because if somebody doesn't like your product, I don't care how good your branding is, how good your PR is, how good your management team is. If somebody doesn't like your product, you're not going to have sales. You need to have a good product. So at the end of the day, we need to determine right now, early in the game, who has the best product. Is it Trulieve? Is it Curaleaf? Is it MedMen? Is it Aurora? Is it Cannabis Growth? Is it Zenabis? Is it Supreme Cannabis? We need to determine who has the best products as a community. And then as investors, that will be a clue to what will happen in the future. It's not always a guarantee, but it should be a good clue. And Lorenzo, thank you for your product reviews, man. And I also want to give the shout out to Mark Pepper. Hey, Mark, thank you, bro, for giving me the link to this video. You are a true scholar, my friend. Mark sends me emails all the time, guys, with big news. And I've done multiple videos on news that he sent me. And he sent me this investor conference. I didn't even know about it. I did not know about this, never even heard of it. Now I'm all about it. I love it. So thank you so much, Mark. And you're here, aren't you, Mark? Yo, man, mad respect. There you are, Mark, saying big taxing revenues for the government. Why would they want the cannabis sector to succeed? Exactly. But at the end of the day, the cannabis sector will succeed because you cannot stop it. And it's not just cannabis. It's CBDs, it's hemp, it's cannabis-infused beverages. It's going to be edibles, I mean, we're talking about so many directions. We're talking about research, R&D. We're talking about media. There's so much opportunity in this sector. It's unbelievable. It's unbelievable. Hey man, you can't stop it. You can't stop it. Sheldon says, feds will not let anything be allowed if they can't get their tax money. I am not a hater. I love you, Rich, just saying. Well, why wouldn't
we are going to wait
here we go.
2 more minutes before we get this panel started.
Testing.
Mark Pepper is a G, a true G. Thank you, Mark, man. You give us the advantage, bro. You give our community the advantage, bro.
Testing.
Thank you for this, man. Mad respect. I just want to win, guys. I just want to win, man. I just want to win. I just want to win, man. Yeah, they used Mark's saying, I read an article, they used hemp to make a house. Exactly. Hemp is the future. It's like 3D printing. 3D printing is crazy. They can 3D print anything, man. Lorenzo says, tell Kim Rivers I said what's up. You know what, Don? I'm going to make you a moderator. You're a cool dude. So I'm going to make you a moderator, Don. So welcome to the community here. Moderators have the ability to moderate the channel, make sure that the conversation is going in the right direction, stays positive, stays focused on bringing winners. If there's any news on any stocks, guys, that are up or down, please share it in the group chat. I'd love to, get the picks while they're happening. I'm focused on the call on this conference, so I'm not really looking at the markets right now. If there's any stocks that are popping, please drop them in the group chat. I'd love to keep up with the stocks while they're happening.
Okay, everyone, we're going to start the panel.
Here we go.
Thank you so much for joining us. I'm Rachel Nussbaum. I am Vice President of Corporate Services here at OTC Markets. I'm joined here today by Edward Bachtell from Marcum, David Lockman from Benchmark, and Phil Carlson from KCSA. I'm going to let each of them give you a little bit more of an introduction of what they do and who they are, and then we'll get started with some questions. Take it away.
Want to go first? Hi, everyone. My name is Ed Bachtell. I am an assurance partner in New York City at Marcum LLP. Marcum is a national firm, and the space that I serve is primarily, leading technology companies, leading entrepreneurial companies, cannabis, biotech, digital assets, high tech, all that type of good stuff that there's a lot of investment, a lot of activity. That's sort of the benchmark of what Marcum and the Assurance Group does in New York City. And I've been there for about 5 years.
Good afternoon. I'm David Lockman. I run the West Coast investment banking practice for Benchmark. Benchmark's a 32-year-old full-service boutique investment bank. We have research, sales, trading, and investment banking services. Traditionally, we've been focused on technology and healthcare, and we expanded into the cannabis hemp CBD space about 18 months ago. And we have 2 analysts that are covering the space now and continuing to ramp up. On a personal note, I've been familiar with the cannabis plant since I was about 4 years old, as my family had 20 acres of land up in Mendocino County, which is part of the famous Emerald Triangle in California. We were not cultivators, so don't get any ideas, but I was around it. I started looking at deals in the space about 5 years ago and investing and advising companies in cannabis around 2.5 years ago.
I'm Phil Carlson, Managing Director at KCSA.
We are a strategic communications firm based in Midtown Manhattan. We have offices in Los Angeles, Boston, Atlanta, and London. Outside of investor relations, public relations, and social media, we also have we're in the podcast business. We have a podcast that my colleagues Louis Goldberg and Ann Donahoe co-host on a weekly basis called The Green Rush. So if you guys would like to take a look, go to kcsa-cannabis.com. And also we do a virtual conference with the OTC 3 times a year that is cannabis related.
All right, great. So guys, I'm gonna kick it off with a question for all of you. After a surge in deals, listings, and stock prices, we have started to see a slowdown in all 3. What would you say are some of the main reasons for this?
Take that?
I like to go last. I'm the auditor.
Well, there's like 3 or 4 things that come to mind. We've obviously seen a capital crunch this year. It's some of these deals that have been happening for some of these companies have not been favorable to the companies or the shareholders. So that's one of the aspects. Vaping, obviously, that's been a hot topic. Some of these high-profile corporate governance issues that we've seen from these large LPs in Canada that were thought to be reputable, but certainly didn't turn out to be that way. And then also, some of the poor results that we've seen from some of these companies, they just weren't, they were overshooting the moon there. But, we're still at the beginning stages of this industry. So you're expecting volatility to happen here. But, as more professionals come into this industry, it's going to stabilize and, everything will come together then. But the investment thesis stays the same, right? Cannabis it's in demand, whether it's medical or adult use. We're seeing that across all fronts. So, the value of the market will certainly be shown here over the medium term as we fix these short-term issues.
Yeah, so I think 2019 has been the year that's defined by companies not hitting lofty projections and expectations that were set in 2018, many of which, when they were on the road shows or raised money to come public. It's definitely, suppressed the appetite of investors and kind of created what I think is a lack of capital. There's lots of interest in the space, but there's not really that many check writers right now. And a lot of the institutional capital is quite limited for the space. And that's obviously a big driving force behind companies coming public. And while there's been some astronomical gains that have been taken by some shrewd traders out in the market, I think lots of investors have taken pretty significant losses this year. And, that means a lot of portfolios are probably going to be limiting their exposure to cannabis for the time being. But that's until there's some clear trends and winners begin to emerge by what companies can actually show on a P&L and a cash flow statement. And I think that's the area that we're getting to, where you're going to start to see the winners emerge. And hopefully people start doing that work to really see who those winners are going to be. And those companies will continue to grow and get financed, I believe.
Yeah, and I'll piggyback off your comment with the P&L and the cash flows. I think it's, we discuss a lot in New York with our practice group being heading up a lot of cannabis clients these days, is that there seems to be a revision back to looking at the fundamentals of these companies, really drilling down on the details of the P&L, the cash flows, the timing of the delivery of those results has been delayed in some circumstances. Just the communication of that with the investors, I think it's starting to be a little bit of a problem. We're seeing where there's capital ready to be deployed, where there could be multiples and something could happen, but there is some issues in terms of what the long-term trends are going to be, when they can deliver on financial statements and things like that. But I think there's still a long-term growth here in this industry.
So, David, to follow up on what you were saying, where do you think the industry is going in 2020? What do you think will be financed, and what kind of deals and structures do you think will actually get done?
Well, I'd like to tell you something original, but I believe the most accurate answer is captured by the latest tagline, which is 2020 is going to be about the haves and the have-nots. In other words, who has cash and who does not, who has expanding margins that are worthy of investment and who does not. There's very few public companies in the space right now that are earning a profit. And that means the runway to burning through the cash on the balance sheet is a reality that most are facing. So I think it all comes down to using the cash that's on hand to get to profitability and cash flow, or at a minimum, showing expanding margins in that they can actually scale the business. And that's for public companies, and I think it's a reality for a lot of the private companies I know that are also trying to scale and realize big growth plans. So I think companies that have a clear path to profitability continue to get funded. Innovators, those focused on rapid onset edibles and drinks, technologies that kind of drive those, brands that tell a story and resonate with their target audience and are leaders in their respective markets per data sources like Headset and BDS. And I think there's a unique opportunity right now for technology companies as well to probably have more leeway regarding reaching profitability, as technology companies do. And I believe, for the next couple of years, I think the U.S. will continue to be one of the big focal points for investment. I'm sure the Canadian LPs will continue to try to build out some of the international markets, but I think, it's really about continuing to focus and building out a lot of the U.S. markets, the brands, technology. I do hear some interesting things about some of the international markets where you hear people talk about low cost of production, as we've heard from here today, Africa, Colombia, Puerto Rico, Jamaica. I haven't been on the ground in those places and diligenced it, so I'm not going to weigh in on it, but definitely themes we should look at. As I did ask about Africa earlier, where's all that product going to be sold? That's really the big question, and I would remain a bit skeptical on that. It's great if people can cultivate low cost wise, but where are they going to go in the long run to sell it?
And what, Edward, is sort of the accounting perspective of what's going on in the cannabis industry? And do you see the SAFE Act as something that's going to make it easier for companies to go public?
I'll try not to bore us all with accounting and auditing. I do love to talk about it. I've been in the industry for about 20 years, but I know how quickly eyes can glaze over when we get into the weeds of accounting and auditing. I mean, cannabis is new and it's fresh, and there's not a lot of accounting and auditing firms that are involved in it currently. I'd say we are currently one of the largest. Coast to coast, we're constantly onboarding cannabis. That is one of our leading growth companies for 2019 and for 2018. But we're running into sort of the traditional problems that you would run into with any sort of fast-growing company or fast-growing technology company that you would see, where when a company is starting and it's growing and it has limited resources and where it needs to allocate those resources, typically, from an accounting perspective, that's going to draw the shortest straw. So, you have these private companies that are looking to grow top-line revenue, looking to expand their business, drive quality, diversity, drive technology. The last thing on their mind is, I got to make sure that I have, quality books and records, because they don't know what tomorrow holds. So what happens is, or at least currently in 19 and probably going forward, these companies are looking to us and they're looking to their accountants to say, we have a potential transaction down the road. And, not down the road. Typically when they come to us, they say, we have a transaction ready to go yesterday. So can we have your audit report tomorrow so we can, so we can raise capital and we can sell out and all those good things. The problem is that, you run into these types of companies and they have, bookkeeping problems. Where are the records kept? Who was there then? That person's not here anymore. And so you run into those problems, and it's not specific to cannabis. It's specific to sort of any sort of growing company that has sort of a corporate governance issue that they need to put in place. So that's what we're running into. And of course, the owners and operators are potentially, promising one timeline but the timeline can be very, very different once you start to get into the actual financial statements in the weeds. That's what we typically see. I think the SAFE Act is, it's a positive. It's a good positive move. They're going to get better banking. It's going to be easier for us to audit. Companies aren't necessarily going to see a real change in, let's say, the audit process. You're not shaving off weeks, months, but it's certainly a positive development for the entire industry as a result, and we're happy to see that. But if I could give a little bit of an anecdote of a client that we're trying to work with in terms of all these issues that they're running into, they have a deal on the table that they're looking to complete very, very soon. Short timeline, a lot of capital at stake. They had a very reputable, well-known national brand accounting firm. That accounting firm did private company audits. They want to go the public route. That accounting firm is not interested in reissuing their audit report in connection with that financing. So then they have to go out and find another accounting firm to go back and re-audit that entire year. And in addition to that, because the timing is so tight, we said, let's split up the 2 years. Let's find another accounting firm to do 1 year. We'll do the other because this is so tight. We just want to move forward. Well, there's problems with the other place because they're not necessarily registered in Canada. So there's all these sorts of issues that you can run into if you're not careful. And you have to be really cognizant of who you're going to choose to do business with. The one major thing that you need, or the only thing that you need to go public is an auditing firm. So you want to make sure that they are available to do all the potential exits that you would be interested in, whether it's go public in the United States, go public in Canada, are they PCAOB inspected or registered, and all those good things. So it's an important part of your business down the line, but we certainly recognize, because of the space we're in, that doesn't tend to be the primary focus when you're starting or growing your company.
And unless either of you have anything to add, I wanted to ask a question to you, Phil. I know there's been some bad press about potential security irregularities and issues of black market products and other bad publicity issues. How do you advise clients to handle these situations? What do you think the best practices are for the bad news within the industry or company specific?
Okay.
Loaded question.
Okay.
That goes to investor relations. What bad press?
I know, right? So, excuse me. There's certainly going to be bad actors in every industry, right? But it's more than our clients just telling everybody that they're not that bad actor. So they need to have independent testing on their products. They need to have knowledgeable legal teams, knowledgeable marketing teams. So when they're out there selling their product or marketing their product, they're marketing within the regulated guidelines. They also need to have independent board members. They need to aspire to be the company that they want to become. At KCSA, one of the things that we do when we start off with a client is we have this process called our fire starter. So we get to know the company. We do a complete brain dump with the company right out of the gate. And, we ask everything. We put an agenda together to go through about 100 questions, making sure we can find where the skeletons are, in case there are any, right? So we want to make sure that if there are, what's the crisis communications program that we're going to put together in place here. But from there, we put together a 90-day plan, make sure that the company is in lockstep with investors and the media, make sure that they're doing quarterly calls, quarterly updates, shareholder letters, and put together that press release program, how it's going to fold out over the next 90 days.
And who do you all feel is the current investor in cannabis? There's been a lot of talk about retail and cause investors. Are you seeing more acceptance in large institutions? Do you think that issuers should be targeting, which kind of investor, the institutions or the retail investors? And where do you think the next wave is coming from?
Sure.
Yeah.
So I remember it was 6 years ago when we first started in the cannabis practice, and we were reaching out to investors with a few of our early clients, and we were calling them up and saying, hey, we have this great cannabis company we'd like to bring by. it was pretty much the same across the board. They'd be like, cannabis, isn't that marijuana? Like, what are you guys doing bringing these companies around? So that sentiment has certainly changed. But, you know, it's been a rough go in 2019 with the capital crunch, the vaping issues and whatnot. But, you know, there's still retail money that's out there, family money office that's out there. But, you know, you've seen a number of these early listings that happened this year where some of these long-only funds who had never, had never put any money into the cannabis space had gotten burned on some of these deals. So, you know, it may take a while for some of these guys to come back in, but once some of these guys are producing cash flow, it only makes sense for these guys to start putting money back to work.
I'll just comment on, you know, kind of from the large institution perspective, you know, the traditional institutional money that everyone would love to get involved. You know, they're interested and they're monitoring the industry, but I think it's going to be a while until cannabis is a bona fide investment theme that they're going to treat like food and beverage with real weighting in the portfolios. And, you know, part of it, not to say something negative about the OTC markets while we're all here today, but a lot of them won't trade in anything that's not exchange listed. So, you know, that's a big hurdle as well.
Yeah, I see the same thing. I think it's really, once they get back to strong fundamentals on a go-forward basis, you know, the investors will come back. I think large institutional investors are going to shy away from it for the short term, but long-term positive outlook, I would think, for sure.
And just as a whole, where do you guys think we will be in 5 years from now, from an investor standpoint, but also from an industry standpoint?
Where will I be physically 5 years from now? I'm not even sure. We're good at history. The future, we're not so great at. Yeah. So, you know, who's going to be the president? You know, in the future, where is Congress going to move with it? Is it going to be you know, is it going to still be federally illegal or not? And those are all like questions that I clearly wouldn't have the answer to, because if I did, I may be doing something else. But I think it'll continue to move in the right direction. I think so. For me, I don't think there's a stigma in cannabis. I never thought that it was. But if you talk to my mother, it's completely different. And I think as we continue to move down this, and the baby boomers sort of age out, and I'm a millennial, apologize. But I just don't feel that stigma exists in the same way that it used to. So it's going to normalize, and you know, it's just going to have a continued growth pattern, and one day it will be treated the same, I think, as you know, you mentioned before, any sort of product growing oranges. I think it's just going to be matter of course. So that's my thesis.
All right, I'll throw out a few predictions and have fun with it. So let's say in 5 years we're rec legal in 35 states. Cannabis is no longer a Schedule I drug. NASDAQ and NYSE accept U.S. plant-touching companies. We have safe banking. I think brands will really have emerged and be recognized across multiple markets. Multiple markets meaning states and countries. I think beverages are going to be big, and kind of sessioning beverages, right? So low dose per unit, similar to a cocktail experience that people would go out and be able to enjoy. I think you're going to generally have just a much more socially acceptable theme around it. And, you know, you'll have cafes, bars, and restaurants. I mean, the Lowell Herb Co. Cafe that just opened in West Hollywood, it is all the rage right now. It's a huge thing. You know, picked up international press coverage. That was mostly because the rabbi at the temple across the street got mad that they were going in, and it got picked up with international press coverage. But nevertheless, all press is good press. And, you know, so I think we see it becoming more socially acceptable. And one last thing I'll add for Ed, what you just said about your mother.
Oh, thank you.
I met with a brand 2 weeks ago in California called Highland Pantry that is focused on women 50 and up. And my mom happened to be in town at the time, and I came back with a little gift box from them with all their, you know, write-ups and guides about their products, and she read it, was very comfortable with it.
Okay.
First time ever.
I'm gonna have to come out there and buy some and bring it back to her.
Hooked up with Highland Pantry. All right.
Convince her the sky's the limit.
I think you guys have covered it, but in the U.S., I'm hoping that it's legal in 5 years, but who knows? Knowing, say Trump gets reelected, and who knows?
Did you say knowing Trump gets reelected?
No.
True. I'm just saying, if that's your prediction, I want to get that on record.
You never know where they're going to go with this. But I'm assuming in 5 years we'll see some sort of game plan to getting to federal legalization. In Canada, maybe they open a few more dispensaries up there. I don't know. We'll see. But for the rest of the world, my colleague Lily Barker and I, we actually met with Crispin Blunt at Cannabis Europa back in June. He is the chairman of the Conservative Drug Policy Reform Group in the UK. And we asked him point blank, where do you see the UK in 5 years? And he's like, we're going to monitor Canada and their adult use program for 5 years, and then we'll figure it out from there. So I found that to be mind blowing. But the rest of the world, it's moving that way right now. There's a number of countries online already, whether it's medical or adult use. So I think that as it becomes more globally acceptable, it's going to just end up becoming federally legal.
Great. Well, if we'd like to open it up to the audience, if you guys have any questions at this time. We have a few minutes left in our panel before we take another break before the presentations.
Yeah, we have a question from the Virtual Investor Conference. What facets of the industry do you think have the most upside potential?
What facets of
the industry?
What facets of the industry have most upside potential?
Medical. I think you have groups like Johnson & Johnson that are already doing trials up in Canada. There is a number of these smaller stage companies that are making headway in the space. So I really think the medical side is going to win out at the end of the day.
I think there's a lot of money to be made on the brand side and also technology, and whether it's technologies to reach the consumer because of limitations on how you can advertise currently, as well as technology around cultivation, extraction, production methods, etc.
I think it remains to be seen with some of the clinical trials that are ongoing, if medical will win out. Of course, that's a perfect hedge that an order would lay out to a projection of the future. So we'll have to wait and see. These gentlemen are much more willing to put a stake in the ground on where things are going than I am. I guess that's just my nature. I think probably short term, it'll be product technology, recreational use, and probably down the line, medical use. Long term.
Coming to you.
A question for Philip. Given the declining stock price in the public markets and your large client roster in that space, have they been spending more money? Have they shifted their expenditures to focus on the different trends? Are they doing more or less events? Could you give us a flavor of what's going on in your?
It's listen. There are investors that are still out there looking at cannabis companies and trying to find the right opportunities. So it's not that we are saying, just go to the sidelines and wait for this thing to blow over. Now is the time for these guys to be out there speaking with more people. So they are putting more money to work, and they are doing stuff, whether it's for investor relations or public relations, but we're seeing that across the board.
I'll add that an excellent place to find out that information is in the financial statements and management's discussion and analysis, which comes out, if it's a public company in the United States, every 3 months. So it's a great place to get management's perspective on where they're deploying capital. I gotta plug financials. I mean, I have to.
I'm curious to get your perspective on what you think the primary reason is for the decline in market caps over the last year.
I think we covered that on the first question.
That's question one.
I'll go back to what I said before. So in 2018, when a lot of the companies were coming public, they had very lofty, projections and expectations that they set. And it was pretty clear as you started seeing reporting in 2019 that those numbers are being missed. They're walking it back, pulling guidance altogether. I mean, you've seen some of the headlines recently. There was plenty of people that were expecting that, and I think got positioned for it much earlier in the year, that were ahead of the bad news actually coming out.
It may go out even beyond just cannabis, right? I mean, there's been a couple of unicorns that have IPO'd that haven't been, that great. We saw, I assume everyone's aware what happened with WeWork.
Some tried and didn't make it.
So, I think sort of that impacts sort of everything in terms of potentially if you're an investor and where you're looking, where you think value is, and re-looking at things, and maybe it's not the unicorn that we thought it was. So it's not just necessarily cannabis; it would be impact from other spaces.
If marijuana becomes, or cannabis becomes federally legal, will there still be a medical marijuana industry? Will you need a prescription for certain types of product?
Yeah, absolutely. Illinois, they're a great example. So, they're going rec legal on, adult use legal January 1, and there's currently 11 dispensaries that are in the Chicago area that are going to be, the medical patients are the ones that get first dibs on what they have for their supply. So the medical program is certainly going to be something that's not going to go away, even though if it becomes federally legal. I mean, Canada, you could, it's covered as part of insurance programs, and I was going to say, I think Germany, like you can.
Is there anywhere in the U.S. where the cannabis is being sold at traditional pharmacies?
In the U.S.?
Yeah, in the U.S.
No, not at this time.
But if you look at states like Massachusetts, or even in California, the dispensaries do section off certain areas for medical. So, for instance, if you were to go to your pharmacy and get Advil or ibuprofen versus naproxen, right, which is a stronger prescription strength Advil, that's sort of the differences that you're going to see. I think as the industry continues to grow and continues to sort of weed out, no pun intended, some of the current issues that they're seeing.
We do have one more question from the virtual investor conference. Can you identify some of the countries or regions that represent future growth, and what U.S. or Canadian companies are positioned to participate in international expansion?
I think we need to get it right at home first before we start looking overseas. But Germany is certainly a spot that you would have to say is going to be a winner. There's 82 million people that are in Germany, so and it already has a booming medical program. So the Pacific South, you have like countries like Thailand that are looking,
Australia. I think one of the things we heard about earlier today, which is interesting, is Israel and just the technology and development there, and we know they've been using it in researching from a medical perspective and tracking results longer than anywhere else in the world. So I definitely pay attention to that market. But I really think that we need to be focused on Canada and the U.S. with respect to the brands that emerge and a lot of the product innovation on the rec side. And, I'd be looking at the Canadian LPs because they're the ones that have gone out and struck deals in most of the international markets that we see today, whereas the U.S. focused operators are focused right here in the U.S. because it represents a very significant market. Like you said, get it right at home first.
And one last one. From an audit perspective, what are some of the toughest issues you see accounting finance departments at cannabis clients face?
I've been on several panels. I've never had an audit question before. Wow, that's great. That's great. It's not specific to cannabis, but typically, if it's a company that needs, let's say, 2 years financial statements, and potentially an interim period, and it has inventory, and it's never been audited before, one of the highest hurdles is the inventory rollback and the procedures that need to be done on that. It's very time consuming from a company perspective. We have to cut off an inventory observation period, and then it has to be rolled all the way back, not only to the first period of audit, but all the way back to the beginning. So if I was going to do an inventory observation tomorrow, which we are in Denver, it has to be rolled back not only to December 31st, 2018, it has to then be rolled back to the beginning of 2018, and then it's got to be rolled back a year before that because it's 2 years financial statements. So that's a big effort just for the client to do. They have to prepare it first. We're the auditors, we're last. And that's a big deal. The next biggest thing that we see, and again, this is not specific to cannabis. We see this all the time with technology companies, biotech companies, digital asset companies. It's sort of unwinding any significant unusual transactions. That's a very boring accounting term and / audit term that we find where there's been sort of a material transaction between the company and the counterparty, whether it be any type of financing, be preferred financing or seed financing, debt financing, convertible debt financing, all those types of sort of fun one-offs. They tend to be very difficult, and it can be difficult to find all the necessary records. So, thank you for the question.
I think we are actually very close to running out of time, so we have one more question available as a final.
I'll ask you another question.
Oh, great.
What's your viewpoint on the biological asset rule versus?
What is my position on it in terms of do I agree with the accounting for it?
Traditionally, it was for an agricultural product. This product has a longer shelf life.
I don't necessarily have a position on it one way or another. We just tend to follow the rules, so to speak. We have clients in Canada that has IFRS has a different method of accounting for this versus GAAP. In the United States, it's a little bit more simple in the terms of you're really just capitalizing costs, which more or less makes it easy from an accounting perspective, and it's not that onerous on a bookkeeping perspective. So I do prefer to keep things as simple as possible from that perspective. So I guess I do have one. I don't overcomplicate it. So that part hasn't been a major difficulty for us. It's really just the record keeping, the historical record keeping of the companies that becomes problematic in these go public transactions.
Well, if that answers your question, thank you guys for listening, and thank you to our awesome panel from KCSA, Marcum, and Benchmark for joining us today. We have about 5 minutes before the next presentation.
we should be going back here with the next company. And the next company is AYR Strategies. AYR Strategies. This is a company I'm not familiar with. I'm going to write down the symbol here and learn something new today. Knowledge is power, and you never, ever, ever stop learning. Might learn about a new company that I'm interested in, might not like it at all. You never know. We'll see. Symbol in Canada is AYRSF. Sorry, symbol in America is AYRSF on the OTCQX exchange, and the symbol in Canada is AYR.
Hello? This is not on. Hi, I'm Chris with OTC Markets, and I'm going to be introducing the companies for the rest of the afternoon. I'm delighted to have Jennifer Drake of AYR Strategies join us. Thank you.
Thanks, Chris. And thanks, everyone, for taking a few minutes with us this afternoon to talk about AYR. I'm sure you've heard a lot of cannabis presentations today, probably from some other multi-state operators, so hopefully it won't be exactly more of the same, but appreciate you guys staying with us. And a little safe harbor statement for you all to read quickly before we get started. And beyond that, wanted to take a couple of minutes to talk about us. Talk about how we might be similar to some of the people that you've seen in the multi-state operator space, but hopefully spend a little bit more time on how we're different. You guys know that obviously why we're all here is because of the incredible growth we expect in the cannabis space over the coming years, doubling in terms of the addressable market in the next 3 years or so. Obviously, this is a great, incredible opportunity for all of us. And the question really is, how do we address that? And what makes our approach and strategy to addressing that maybe a little bit different to some others? And why we think it's a very compelling approach and way to address the market. So this is a little bit of our history for those of you who are newer to our story, I think it makes makes sense to spend a couple of seconds on this, simply because a little bit of our history helps people helps frame why our strategy and approach is a little bit different, maybe to some other people in the space. We were born at the end of 2017 as a large dedicated pool of capital, specifically gathered about 100 million US dollars, 130 million Canadian dollars, specifically raised to create a US plant-touching portfolio of companies that are cash flow positive day one, which might sound kind of crazy to people who follow the space, but specifically our strategy, because we had raised such a large pool of capital initially, and we could deploy that capital to purchase what we believe to be best-in-class operators in kind of some key anchor states, that approach really allowed us to create an extremely strong foundation for the strategy that we think will be successful going forward. And I want to spend probably more time on this slide than almost any of the other slides in the deck, and that because I think it really helps people frame what we think is a great way to go about the operational multi-state operator space in the US by framing kind of what we think is great strategy and what we're not doing in our approach. So who we are and who we aren't. So firstly, when I talk about who we are, when I say we purchased 5 companies together, and with the purchase of those 5 companies, created vertical integration in Nevada by buying 4 companies, and we bought a vertically integrated multi-state operator already in Massachusetts. Why am I mentioning that? Why do I think that strategy is important to highlight to you? Because buying an operator that is already fully built out, that has no CapEx needs to continue its current operations, and have those and with those operations being already cash flow positive, is a lower risk strategy than buying greenfield operations and spending a bunch of CapEx and having execution risk to build out your strategy in any given state. So we thought that was extremely important because, and you guys can maybe, if you want to look us up online, et cetera, what you'll find is that the senior management at AYR has a history in the financial markets. I've been in finance more than 20 years. John Sandelman, who's the CEO of the company, has been in financial markets 35. So we come at this very much from the approach of take how regular companies do business and apply that to the cannabis space to institutionalize and bring best practices to what is an incredible growth industry. So most companies focus on cash flow, focus on growth where they can as well. But if you can combine the two, it's an incredibly powerful proposition. And we believe that by putting together this anchor portfolio of cash flow positive businesses, albeit in only 2 states to start, that provides an extremely strong foundation for us to grow the company going forward. And we believe that that approach is a lower risk, lower execution risk approach to building out a multi-state operation. And in addition, because you're cash flow positive, you are not reliant on the capital markets in order to fund your future growth plans. Because we've been around the block, we've been in business a long time. We know that sometimes the capital markets are open and sometimes the capital markets are not open. And if you build your business plan, assuming that you'll have consistent, constant access to low-cost equity capital, or even low-cost debt capital for that matter, you may be sorely disappointed at a time when your business desperately needs capital. We did not want to be in that position. So from day one, in December 17, when we initially raised the first 130 Canadian of capital to make these investments, we specifically said we needed to be positive EBITDA, we needed to be positive cash flow. So that's the first important point about who we are. That's kind of the second point too. We're very focused on profitability and cash flow. We're not about getting out over our skis. We're about funding organic growth in expansion programs for our existing portfolio companies as they need it from the cash flow either on our balance sheet or that we generate every month. And to the extent that we have broader acquisition plans, which we'll talk about later, those acquisition plans need also to put us in the same position where we consistently can say to our investors that we are not reliant on the capital markets for funding in order to expand our footprint. It's extremely important, and it's a really, we think, quite an important strategic advantage in today's market. The other things that we're very focused on as a company, being disciplined in terms of our M&A approach. There's been a lot of M&A activity over the last, I guess, 9-10 months in this sector. There's some very interesting news, even just today, if people saw the Curaleaf news in terms of how they repriced their Select acquisition. As we've been speaking to investors over almost the last year since we first identified our portfolio companies and announced that, we have been very clear that just because you have richly valued stock does not mean you should grossly overpay for companies. We've seen that story before quite often. It doesn't always end particularly well. And we consistently apply discipline to our pricing in terms of our acquisitions and in terms of our consideration mix. So as an example, you go back to the beginning of this year, maybe in Q1, beginning of Q2, very rich valuations, lots of cash in deals. That consideration mix has now almost entirely changed to predominantly stock for stock deals and much lower valuations. Curaleaf cut the Select deal by almost half today. So, but for us, that financial discipline has always been ingrained in our DNA. We think it's extremely important to have discipline when you're acquiring companies and not to reach. And there's an old kind of phrase in financial markets, sometimes the best trade is no trade, and sometimes no trade is almost like being short. So we believe we've been kind of short the market over the last 9 months or so by virtue of not doing acquisitions, by virtue of saying, you know what, prices are too high, everybody's giving a ton of cash, and these are not cash flow positive companies that are giving a ton of cash, so it's just going to make their build out situation worse. So the right thing for us to do as a disciplined management team, good steward of capital, is to wait, hold back, and wait for the market to come to us in terms of price and consideration mix, which is what we've done. And right now, you can see prices across the cannabis sector are down 50, 60, 70%. Stinks in the stocks, but it makes it a great time to be expanding your footprint. And then finally, and I think this is an extremely important point, as very large holders of the stock ourselves, the management team is extremely focused on maximizing shareholder value. Everything that we do as a company is really driven by the strong commitment to creating shareholder value for our investors. And we think it's extremely important to highlight both that discipline, that commitment, and the fact that we are very much aligned with all of our shareholders. We like to think, and we hope our investors believe this as well, that we are excellent stewards of your capital and extremely committed to our fiduciary duties. But what is our portfolio? That's kind of our strategy and our approach. Let's take just a couple minutes to walk through these two anchor states that we've started with that are the beginning of our footprint. First of all, in Nevada, we purchased 4 different businesses to create vertical integration, 1 cultivator, extractor, processor, 2 dispensary chains, and 1 manufacturer of predominantly infused products. The key in Nevada for us over time will be to push together. These companies are generally pushed together, but they don't sell enough of our own product within our dispensaries. We only sell about, let's call it a bit shy of 20% of our own product in our dispensaries. So the key to our growth in Nevada going forward will be creating some additional cultivation capacity, essentially to feed our stores, to bring that percentage of internal sales to something more like half or 2/3 of our dispensary sales coming from products that we create ourselves, so we can capture as much of the margin as possible. In our Eastern portfolio in Massachusetts, we have a slightly different approach. You guys are familiar with the cannabis space in Massachusetts. You'll know that the rollout of recreational stores has been just incredibly delayed and slow, particularly in the Boston area, where and Boston is where 80% of the people in Massachusetts live, in the defined greater Boston area. There's only one recreational store open in all of Boston. I think there are about 30 stores open statewide. I happen to go to university all the way in Western Mass, kind of right at the top corner, and there's really not much past Worcester in the state of Massachusetts. So there are 29 dispensaries where there aren't very many people. So we really have not seen the true demand in Massachusetts yet, because all the dispensaries that are open for rec sales are where there aren't very many people. So our strategy in Massachusetts is a little bit different because there's been this slow rollout, lots of regulatory delays, and because Massachusetts is an extremely limited licensed state. So not only are the number of dispensaries limited and the number of cultivation licenses limited, like they are in Nevada, there's a cap on the amount of canopy you can grow in Massachusetts. There's no such cap in Nevada. So in Nevada, there can be one cultivation license, and there's a public company that, so you guys probably may already know all of this, but there can be one cultivation license and 400,000 square feet of cultivation space created by that one license. It's a company called Flower One. You can't do that in Massachusetts. So there's going to be more demand in Massachusetts. There's going to be much more than in Nevada. Bigger state, more students, big population around Boston that hasn't even been touched yet. And there's going to be, in our mind, a consistent long-term imbalance, or at least medium-term, at least for a couple of years, 2, 3 maybe, imbalance between supply and demand. So we think that there's an excellent wholesale opportunity in Massachusetts, as well as a great recreational retail opportunity in Massachusetts. So our strategy in each state is a little bit different, depending on the environment in the state. And as we expand to more states, you'll see us having kind of similarly different strategies depending on what's appropriate for each state. But in all of these strategy decisions, what's driving our thought process is what's the best way for us to allocate our capital, what's best return on that capital for each of the underlying regulatory regimes. We'll spend a couple of minutes on our financial profile. What I would highlight here is that these 2018 numbers are actual audited numbers from the companies that we acquired. The 2019 numbers are our forecasts for today based on our the annualized period where we own the businesses, which is really about 6 months. And then in terms of the 2020 expectations, the key to our growth in 2020 is, again, as I alluded to when talking about the states, expanding the existing capacity simply to meet demand that we either have in our stores in Nevada to go from that 20-ish% internally sourced product to 50 to sort of half to 2/3, and demand that we have in Massachusetts in the wholesale channel. And I want to spend a second just to talk about that wholesale demand to give you guys a sense of it. And this presentation is available online on our website in the investor section, so people can grab it whenever they want it. At the beginning of this year, in January of 2019, we were selling about $400,000 worth of wholesale product per month. It's not that much. In August, we sold about $2.5 million of wholesale product. We had demand for about $4.5 million of wholesale product, which we simply couldn't meet based on our existing cultivation footprint. That demand is only increasing in September and into October, particularly because there's been, you guys may know this, a ban on vaping products in Massachusetts, which basically means that everyone is desperate for flower. If you have flower in Massachusetts, it's basically like gold right Now, we don't expect the vaping ban to stay forever, but it just gives you a sense of, with 29 dispensaries open now and more dispensaries coming online, multiples of the demand that we can produce. And we have one of only 3 wholesale rec licenses in Massachusetts, which is one of a very kind of good fact and makes us able to sell to rec dispensaries that are only rec. As the number of dispensaries opens in Boston, again, only 1 in the entire greater Boston area, and it's killing it, it's private. 1 in the greater Boston area, probably 40 over time. The city of Boston itself is targeting 50 dispensaries long-term, just in the city of Boston. That's not Boston plus Cambridge plus Newton, just the small city of Boston. As the number of rec dispensaries expands over time, much of the expansion will come from people who only have a dispensary, who aren't vertically integrated, and they will need to source their supply from somewhere. And we're one of the few places today where they can do it. So we're very bullish long-term on the wholesale market in Massachusetts. And obviously the rec retail market is going to be great there, like it is in every densely populated area. We've spent a lot of time making sure that our acquisitions are kind of well integrated. We're about 5 months into that process. It was a fairly seamless project within Nevada, because each individual group wasn't vertically integrated before, so they were all very happy to be able to direct product development for the first time in the dispensaries. So just to give an example, for the first time in July and August, we were able to have our extremely productive dispensaries, which do 1,000 plus transactions a day, which is a huge number. They were able to take real-time feedback from their customers, go speak to the manufacturing folks and say, we really need 2 things. We need a high quality but affordable full spectrum vape pen, and we need infused pre-rolls. And they could not get those from their suppliers before, even though they had a lot of clout with their suppliers because they did so many transactions per day. They just couldn't get them to manufacture exactly what they wanted. But when the manufacturing became in-house, that process became a lot easier. And that's been one of the biggest success stories in Nevada, and really shown everybody from the manufacturing folks up to the retail folks how powerful it can be to be a vertically integrated company that can pivot and move quite quickly. So the integration within Nevada has been very productive and provided some great product development already. And the integration between Nevada and Massachusetts has been just invaluable. Before we closed the transactions, we used to say that we thought it was very powerful to be able to bring experienced people from Nevada to Massachusetts as Massachusetts transitioned to rec. And I think we underestimated the benefit that we had there. It's been incredibly valuable, and I think it will show up quite importantly long-term as we really hit the ground running in Massachusetts with new product development on the wholesale side and best practices on the retail side. I'm going to spend just 2 minutes on our acquisition strategy and then open it up to questions. But this is a very important slide for us to end with. I started off the presentation by talking about how essentially we've been almost short the market by virtue of not doing acquisitions sooner. For us, for the management team at AYR, these acquisitions are really what we do. You wouldn't want me growing your cannabis. I will tell you that. We have a great grower. That is not my forte. None of the management team's forte. You probably wouldn't want us extracting or infusing or creating your edibles either. But the one thing you would want, with us having been in the markets for so long, having so much experience on the finance side, and just kind of generally on Wall Street, the one thing you do want is us doing your M&A. We put together 5 businesses in a simultaneous acquisition to create AYR, which is really hard. If anyone wants to try it, I don't recommend it. Don't do this at home. It was really painful. We took 130 million Canadian dollars worth of capital and turned it into 400 million of market cap. Even at today's prices, after the terrible downturn in cannabis stocks. We have done an incredible job of doing deals to create value, and I fully expect us to continue to do that in this much more advantageous market where people are running out of money. We have cash flow. People are not able to execute on their business plans because they got over their skis and spread themselves too thin. We have excellent experienced operators that are so good that even, for instance, in Massachusetts, when it's medical, they're EBITDA and cash flow positive. So we have very strong talent at the operating level. We have very strong talent at the deal making and management level. And there are a lot of people who are much more interested in coming to the table and having a conversation than they ever would have been in Q1 or Q2 of this year, and at much more attractive prices. So we think the market, by virtue of being patient, the market has really come to us. It's a market now that really accentuates our skills, and it's an excellent time for us to expand our footprint at prices and deal terms that are much more accretive to shareholder value. So with that, I will stop and take questions, if there are any.
So we do have one question from the virtual investor conference. One of our viewers mentioned, unlike other states, I believe Massachusetts has limited the number of retail licenses it will approve. Will this limit your ability to buy other operating companies in Massachusetts?
So Massachusetts is a limited license state. You can only officially own or control 3 dispensaries. That is absolutely true. Some people are exerting control over more than 3. We figure we want the regulator to be our friend. That's all. It tends to be the way it works in other industries. We figure we want to stay on the right side of the regulator, and that is the rule as far as we can read it. However, the wholesale opportunity in Massachusetts is exceptional. The whole reason there's that 3 dispensary rule is because Massachusetts doesn't want big business to take over. They want this little guy to still win. And every one of those little guys owns a dispensary, but is not vertically integrated, which means they need to buy our weed on the wholesale market. So that is a good reason why we are continuing to be bullish on the wholesale market in Massachusetts in a way that we wouldn't, for instance, be bullish on the wholesale market per se in a state like Nevada.
Thanks, Jen. So we're opening up now for any questions in the audience.
Can you share the list of states that you have interest in making acquisitions in, and are you looking at anything outside the United States?
So there are a number of states that we would have interest in. I think we are in a good position right now because, frankly, if we had 10 states already in our footprint, then we might have a bit of a kind of jigsaw puzzle problem or a Tetris problem with lots of holes already in there. People know that game. It's kind of old, so maybe people know it. So the states that are interesting have the following characteristics. Large addressable population, obviously, because you can't have THC across state lines. Limited licenses, predominantly. There might be an exception in Colorado, but generally limited licenses. Allows vertical integration, so you can capture the vast majority of the margin. One more, it'll take me a second. So vertical integration, limited license, recreationally legal, or about to be. So we would like something that's very close to, that has a path to recreational legalization. Those 4 characteristics, basically in our mind, are the ingredients to positive cash flow, that plus being a good operator. And so a number of states fit those characteristics. Illinois, Michigan, New Jersey, maybe New York, depending on how they implement. Pennsylvania, Maryland. Virginia is probably a little long to get to rec legal, so maybe not so much there. Florida to Arizona. California is a super interesting state, but really hard, very tricky. And California and New York are probably the states that have the biggest black market problems, so those are somewhat intractable, and so you gotta be careful. But there are a lot of different states. I'm not saying we need to have all of them. I'm not saying we absolutely must have some of them, but I'm basically saying here's our option of things to play in. And there's a lot of stuff out there.
When you talked about the wholesale, are you looking more at acquiring brands to fill out those wholesale SKUs, or are you looking at the current acquisitions you've made to fill out those SKUs?
So brands, people are super into brands right now. So, and ultimately we do think brands are where a lot of the market will go. Brands are really present in California right now. And when I say brand, like a real consumer products company would not call it a brand because it has like 1% or 1% or 5% market share max within its category. These are businesses that just are not doing that much revenue and are not gathering that much share as a percentage of their category. So to say that there aren't huge brands that exist now, so why acquire it? If there's nothing that's over 3%, why spend the money? You can just make it yourself. That it maybe is a little bit different in California, and it will be different over time across the US as you're able to have a more rationalized supply chain via however legalization happens. But for brands now, I think one of the big challenges is that multi-state operators probably don't want to carry each other's brands. If Coke owned the grocery store, Coke wouldn't want to carry Pepsi in its grocery store. And we think that's just real. And that limits brand growth in some of the smaller states. And the reason it's not limiting brand growth as much in California is because you can just have better economies of scale because there are so many people in the state. And I mean, it's whatever, the 5th largest GDP and has a population bigger than Canada. So of course you can develop brands in California, but it's not clear that a California brand actually will translate to Massachusetts or will translate to Florida. Maybe it will, maybe it won't. And it's definitely not clear that there's there's certainly very little brand recognition across the space today. So brands are going to be super interesting going forward, but probably it depends on the price as to whether they're a good acquisition target in our mind. It's medical mostly still. Yeah, in Nevada, you're starting to have some California brands come to Nevada, which is a very interesting phenomenon, which we'll be watching quite closely. But brands are going to be it over time, but probably are not. If I had bang for my buck per dollar of capital for AYR, I probably wouldn't be buying brands. I'd probably be building out wholesale in mass. Or Michigan. Michigan's a great wholesale market too.
Last question.
You instituted a share buyback in September. Could you talk about that as use of capital and your viewpoint on near-term acquisitions?
Yeah, I think we want to have the share buyback in place and approved so that we can support the stock as appropriate. You guys can see on SEDI, S-E-D-I, in Canada how much we've bought back. It's not been a ton. The idea of the share buyback program is simply to have it in place, to use it as appropriate. And certainly our stock on a multiple basis is pretty cheap relative to kind of the universe because we were born as a SPAC and no one knows what that is. And we de-SPAC'd in June when the sentiment in the market was going kind of just one way. So we definitely, it's an important tool to have in place in our mind. And I think we also think it's an extremely strong signal to the market that, and we put this out in our press release, if nothing else, buying our own stock at sub 3 times EBITDA is an excellent use of our 1.7 million of free cash flow generated every month.
Great. Well, thank you, Jennifer.
Thanks.
Next up, we have Heather Molloy of TerrAscend.
You guys hear me? Am I on? Do I just flip the...
Okay, here we go. Hi, I'm Heather Molloy. I work with TerrAscend. I am the Executive Vice President of Corporate Development, and I'm going to speak mostly with you guys about what we've been up to in the U.S. I'm really thankful for having the opportunity to speak with you. We have not been very outward-facing or speaking with broad groups of investors, so this is an exciting time for us to actually start connecting with a broader audience and hopefully having a chance to connect with many of you and for you to know what we're up to. So this is our disclaimer. We are in a quiet period right now, so I'm going to be limiting. I won't be really speaking to the financials. I will be speaking about the growth and the strategy that we're pursuing, which I think is really exciting. So TerrAscend, I feel like this is, so we are a global cannabinoid company, and we are committed to scientific innovation and operational integrity. And we are focused right now on 3 of the world's largest markets. Our company originated in Mississauga, which is right outside of Toronto. It's near the Toronto Pearson Airport, and it's in an area with a lot of pharmaceutical innovation known as Pill Hill. And we were founded by a pharmacist named Michael Nashat, and then most recently have received a tremendous amount of financial support from our largest investor, Jason Wild, who's also a pharmacist by training. From our Mississauga facility, we've been very focused on having the ability to defend a position in unique markets. And so we've been really focused on developing our facility to have GMP. It's one of 11 that's able to export into the German market. And we like this differentiated, defensible position. So from Mississauga, we're focused on limited cultivation. We have a very limited cultivation footprint, and serving the Canadian market, which is unfortunately rolling out slower than I think many people had hoped. And then most recently this year, we decided to start pursuing a US strategy. And that's, I joined the team in May of 2018, and have been focused on looking at the US opportunities and developing a strategic foothold in US markets. We have been an active consolidator through the M&A following the de-SPACing of AYR. We've been looking at transactions since May of 2018. We developed a pipeline that we started executing on in January of 2019, and we've had 4 acquisitions in the last 10 months. We think that one of the differentiators of our platform is our pharmaceutical grounding, and that we have a drug preparation premises in Toronto, which right now is a potential diversified business. It acts similar to a compounding pharmacy, whereby doctors are writing the recommendations and doctors are the customers. And from that facility, we can do non-cannabinoid drug preparation premises, and through time, we hope that it's a platform for innovation. We also have a partnership with Ascendant Labs, which has been really focused on maintaining high quality genetics and stabilizing genetics. And we think that there is tremendous science and innovation that we will have the benefit of based on the work that's been happening at Ascendant. And then through our development in Canada, where retail branding is limited based on the rules in the market, we've been pursuing a brand development and acquisition strategy in the US markets, and I'll talk about that when I look at the portfolio companies. And so who we are right now, we've grown pretty rapidly. Right now we have